Welcome, everybody. Thank you for joining us for this podcast. I've got a trader, Nick Bowden, who's been a trader for me with how many years, do you reckon?
I think we're
How long
getting
have we
on to
known each other?
about 12 months now, isn't it?
12 months, yeah. Or maybe a bit more, I reckon. I was going to say 2 years, but, who's counting, right? Um, so Nick has got a very unique style. So I do suggest everybody just hangs around and waits for, has a look at how he trades and analyzes the market. It's quite unique. And it's very profitable for him. He puts up a lot of profitable trades and great analysis up on our Discord channel. But firstly, let's just talk about, who you are and where did you come from? How did you get started? What made you interested in this game? Yeah.
Absolutely.
And
Yeah.
why? Why are you doing this?
Well, I suppose let's take it all the way back to school. So I'm turning 36 this year. And during my sort of junior school days chose sort of IT as an elective. And one of the sort of sub things the teacher did was the demo course for the stock market trading.
Yeah.
So in year 8, I sort of had my first taste. This was 2001.
You get this kind of jackpot view of the market, don't you? You go, wow, this could be easy.
I mean, a little bit, yeah. So it was, I mean, we had a 50 grand demo account and the aim was just to beat the other classmates, really.
Yeah.
I didn't come first, but I think I made 30% in like the 6 months or something.
Wow, that's actually a good return, isn't it?
Yeah, it didn't seem that bad. It was just, a couple of runaway stocks at the time. I can't even recall what they were. It was so long ago.
How many of your classmates lost money?
At least 50%.
Yeah, of course.
A few of them didn't take it seriously and they just bought like one stock and just,
Put it all in one.
by the end of it, they were up, but they weren't exactly, utilising the full nature of what the teacher was trying to sort of
And
get across.
you come from a banking background, is that right?
Yeah, so no uni, went straight from school with an average enter. I got 49. This is in Victoria, so I got 49 for my enter. So lack of discipline in applying myself more so than anything else. Went the old delivery driver route and spent a few years mucking about and then had a mate who said, what are you doing? Come get a job at the bank. Give me your resume. I'll palm it off to the recruiter. We'll see what happens. Gave her the resume. Got a call back in 20 minutes. They're like, oh, come start, Monday. We need you in here tomorrow to do
Oh, well, that's pretty good.
speed test. And I'm like, yeah, all right. Well, the paper hour was much better. It was about $12 an hour at the pizza shop and the bank was offering 24. I'm like, oh, I'll see you later, mate. It wasn't a hard decision to bail on him. And that was it. That was my first taste into banking. And
so what were you doing in banking before you started trading?
So
what level were you at?
I've been trading for over a decade, but I really started with shares about a year or two after I started in banking. So I mean, really early in my early 20s. So it would have been 2021. I was in international trade at ANZ, and I was just a document scanner at the time, just sort of bills of lading and all the trade docs, just scanning into the system and data entry. And then I got put on the Ford Exchange desk for currency, and that re-triggered my interest in markets again. So there was this one guy, Michael Waring Trading, I remember him, and he was just such a gun trading these forwards. He used to trade these Aussie USD forwards.
Yeah.
And I was seeing him just close these swaps out against each other for like, he was making like 200-300 grand a quarter just on trading the currency. This is outside his hedging.
Yeah.
He was just so good at it. And really being involved in that role, and that particular role wasn't actually trading the markets and getting fills for customers. Treasury and FX would just send the orders down to me, and I would be the one that put them into the system and actioned them. So
the bank gave you a lot of experience with at least FX.
Absolutely, yeah. I got to go up to the floor one day and have a chat to the traders, and I used to have a couple of these of the traders at the time, and it was just a really good sort of exposure to what it was. But I didn't really get much experience in trading from that aspect. It's
so like not technical trading.
No, not at all. It was more just execution of like forex orders more than anything else.
And where did those orders come from? Those orders were other people, you were acting like dealers?
No, so it was the customers. So I was in
hedging,
international trade. So whatever the ANZ customers needed, like a forex hedge or
hedging, or
yeah,
hedging.
invoices were in another currency or anything, they'll just go through ANZ to do the currency swaps and
Yeah,
exchanges and things like that. So that was mainly the aspect of it. It wasn't like on the desk directly trading currencies or anything like that. It was business related to the international trade
yeah,
sector. But still interesting in itself just to see even how customers would hedge, customers would use currency,
yeah.
things like that. So
Yeah, well, that's what the derivatives market's all about anyway. I mean, whether it's a futures contract or foreign exchange, its primary purpose is there for hedging purposes
precisely,
for
precisely. And I think
price
the
risk.
the thing that piqued my interest the most was like the carry interest on the FX trading.
Yeah,
So I sort of moved slowly. At that time, I was just dabbling in shares, and just the Aussie blue chips like Telstra and BHP and whatnot. Actually, just buying and selling shares through E-Trade or whatever the ANZ brokerage was at the time.
yeah,
And that was fine. Made a bit of money doing that, and then got onto an actual like broker app. Downloaded the broker software, got into the FX market, and mainly started trading dollar yen
okay.
at the time.
What's the reason for that? Why dollar yen?
I,
You just had a love affair with it, did you?
yeah, I don't know why it attracted me, but it just did. Like I saw
Asian time frame. No,
Asian time frame. I saw it being linked to everything as well. Like I think at the time, like this, I didn't really trade before the GFC. It was after the GFC where I really started trading.
yeah.
So that was all. I mean, I didn't really know what happened during the GFC. I didn't trade it. I started after that. I did a bit of share dabbling and then sort of went
Oh
off it.
God. I mean, I remember trading it. There was limit down pretty much every day for a week. So it was very interesting.
It'd be great for shorts.
Great. But if you were stuck
Yeah.
short, if you were stuck short during GFC, you'd be just rolling in it because you
Oh,
couldn't exit the position. You had to sit there. Right.
yeah, yeah.
So it was, yeah, that was pretty interesting, that period.
Corona sort of reminded me of those few days that the same, where it was just limit up, limit down before actual market hours.
Yeah.
It was pretty
It's
wild,
kind
but
of scary. Like I've never really seen it on the S&P 500. That's the only time I've ever seen limit down.
they've done a remarkable job at preventing many down days
Yeah,
in the
trying
last
to
few
stop it. And
months.
do you know what they've done? Um, they changed the way that they do news releases. So they do an interim release, so, this every 2 weeks. So if you've got CPI or you've got employment numbers, they'll do it's not halfway through the month, just a preliminary release. So it
Yeah,
just softens the blow of the market instead of just dumping it all at once. So that was a change from 2008. You can
yeah,
see that on, yeah, did you know that?
yeah, a lot more sort of jawboning with just talk now.
Yes. Yeah.
Uh,
And then,
and
and also all of the Fed speakers, they're a lot more calm they're very, um, uh, you know, they don't over exaggerate anything anymore. They're just really calm with what they're trying to tell everybody.
yeah, agreed,
Yeah.
agreed. It's just so often as well, though. I feel like there used to be a period where you could go a week or two without hearing from anyone important, and the markets would just trade and find their own direction. And
Yeah.
now it's kind of like we just can't get away from like an ECB speaker or a Fed speaker or
Yeah.
something else.
And
And
all of them will speak and yeah.
yeah, and it's
But if there is another GFC or a crash going to happen, everybody will see it from a mile off. It won't be a surprise.
I mean, yeah, it seems that way too, doesn't it? But it feels like, and it has to be like an enabled event now. Like we've already gone through and we've had the response to the previous crises, and they found ways to contain it
Yeah.
or delay it or kick the can down the road. But I mean, if we just roll into like another GFC type of crisis, it's just going to be like, oh, we just print some more money, isn't it?
Yeah.
Isn't that the solution to last time? We just print away and we dilute the currency and debase it, and that will send stocks up, and everyone will get excited again and drop the interest rates and get everyone lending.
Yeah.
I do feel like we may be running at the end of the current regime, like structurally, like
Yeah, I agree with that.
it's the US is $32 trillion in debt, and
Yeah.
you know, don't think Germany had this much leeway back in the early 19th century for their runaway
Yeah. Can I ask you a
currency
question?
debasement as well.
Is
So
it
it's,
important for somebody who's new at trading? Is it important? I'm going to ask you a two-pronged question here. Is it important for them to understand fundamentals in a deep sense? And second part of that is what are the main key factors of fundamentals that you look at?
yeah, so bonds. So my experience in trading has been forex and uh, equities and shares, indexes, CFDs, futures, bond futures, index futures. Not so much like commodities or anything, but done a little bit of oil. But you can't ignore what bonds are doing, especially with the US having hegemony, and I mean we've gone from zero bound rates to like 5%.
Yeah.
And
So coming back to the question was, is it so for to have an understanding of bonds, of the Treasury, having the understanding of Fed speeches, understanding, you know, um, you know, volume flows, statements, etc. That's an important factor in how you're trading. What percentage of factoring of that do you place on making trade decisions?
so I think my trading style has very little fundamental touch. I mean,
I've
I'm
noticed.
constantly reading the news flow and everything, but I'm
Okay,
not
but
really
why?
spending.
Why are you reading it?
Well, because we have to understand what's going on.
So you need to
Like
have a macro view.
we have to have at least a view, and it's more so. I don't want to have a particular view. I just want to see what the view is that others are having.
Right. It's so that you can grow intuition into what's going on.
Well, there has to be for trading, right? Like someone has to be wrong for price to move any
Right.
reasonable amount. Someone has to be wrong. They have to give up on their trade in size. And generally, like we're trading smaller size. I want to see when someone gets turned around on like the 4 hour chart. And we can see it occur via data releases as well. But there's just not enough data releases for me to trade against. And I hate the way price action revolves around data releases. It is just woeful. Like it's so jerky and choppy.
Yeah,
I,
because
I despise
you've got
trading CPR. I despise trading like FOMC, like rates releases. It's all garbage.
it's all your bots coming out and giving it a whip around, isn't it?
Yeah, it's not great, but that's why I sort of moved away from trying to sort of trade against the fundamentals, because a lot of the time positions are already on when the news flow comes out. So it's
Yeah.
delayed. Like for instance, the whole AI craze, right? Which is kicking off from this year, really. It's been 2023, a little bit of last year. At NAB, they were implementing AI in our workspace like 12, 15 months prior. So the whole AI crisis is happening now. We're not in the foundation stage. It's
No.
already been
Yeah.
implemented.
Yeah.
We're at the like the harvest the pig stage.
Yeah.
So Nvidia are trading at like 480. I want to buy in here.
And we were talking about that last night. The PE ratio on Nvidia is what is it, 192 or something?
It's north of 200 or something, or
Yeah, it's around
240.
somewhere like that. And we were talking about Tesla. Remember Tesla was at 400?
900 at one
I
stage.
don't know. It's just that's the tail end of all the speculators. So this is the one where I
That's
always
zero
go back.
rates. That's zero rates.
I always go back to when your taxi driver's telling you to buy a stock, you sell it.
Yeah,
Right?
yeah.
It's the complete opposite because you're getting in the tail end of speculation where everybody's piling in. The true position to really get into on a fundamental level on a stock or a market of some sort is right at that foundation level, isn't it?
Exactly. Or when there's been when there's blood on the streets, but it's
Yeah.
not terminal. It's not a terminal death of the stock, but it's beaten down enough. But also, I mean, Tesla and Nvidia and all this. I mean, since 2020, really, like things were starting to get a little bit back to normal from like 2017, 2018. Like rates were going back up, and markets were actually going, up and down instead of just constantly up. And then COVID happened and we just released the floodgates.
Yeah.
And that was, you know,
But speculators love that, though, don't they?
loved it because it was
Soon
just
as there's
huge.
just a hint of anything, everyone piles in on it. It doesn't
Absolutely.
even have to be real.
And the amount of shorts that were probably, that shorted the market in Corona, thinking there was going to be a longer term downtrend, maybe a couple of years,
Yeah.
trillions of dollars. So
Yeah.
the
Well, they
reason we
got
got so
absolutely
high, they
creamed.
got wrong way.
Yeah,
Like
they got creamed, didn't they?
creamed. All the people that,
Well, that's the thing, what I've noticed over the last 20 odd years is that markets, when there is a crash, if you take the 1987 crash, right?
yeah,
The recovery from that it took a long time to do it because, a lot of people, they didn't have the derivatives behind it. They didn't have, speculators that could understand shorting. So they were mostly long only. But if you go jump ahead from 1987 to 2008 and beyond that, recoveries from market crashes are way quicker.
so much
Than,
faster.
so much faster just due to the access to derivatives, right?
Yeah, yeah,
So it's because they know it's going to, and they just want to cash in on this cheap environment, right? So I don't think the long term, anybody who does think or who's a professional who thinks long term recovery is going to happen in indexes or stocks, or unless the stock's something fundamentally wrong with it, but especially on indexes, currencies, etc., they've got rocks in their head. It's always going to be like a V-shaped reversal of some sort.
yeah, yeah.
And you go back in your chart and have a look at a daily of the S&P from 2008 onwards. The recoveries are always really quick.
Yeah, yeah. And it's this, willingness to just unload, like release the floodgates, really. Like even with the banker rescue in March, the special lending sort of setup that they've done. So that's now over $1 trillion
Yep.
utilization on that. What is it? The reverse? It's not reverse repo. It's something else. They came off the back of SVB. Sorry, the Silicon Valley Bank. So again, we're still being supported by the central banks.
That was a great trade. I love that. And that is Silicon Valley Bank, hype. And that's a pure example of, everybody will just jump on anything.
Yeah, yeah, they smell the weakness and bam, look
Yeah,
at that.
bang,
I think
off it goes. Yeah, good
yeah,
trade. All right, so let's move into the next bit. Hang on, let me just ask you a couple of questions. What do you reckon about trade? There's somebody new coming into trading. Is it a question of nature or nurture? Do you think somebody is born a trader and has the ability to do it? Or can somebody learn it? Or is it a combination of both? Is there a personality type, I guess?
I want to say yeah, kind of. I think.
What is that personality type?
Well, I mean, willingness to take risk for one. You can't be too adverse to risk at all if you want to be a trader. Like it's for me. Like I will let positions go past BE quite a bit. I'll let them hit my stops quite a bit.
Yeah.
I don't want to, but sometimes you just have to take a risk to see if it's going to play out.
So if you don't like to lose, this is not the game for you.
If you don't like to lose, you can't play. And you have to really condition yourself to lose. Like previously, it's not easy to just win all the time because you get this false sense of security and you might over leverage. I think this is what Groves touched on as well in his chat with you. You can't get too confident in yourself. You've
got to be vigilant, that's for sure. Yeah.
You have to take losses. You have to. Like it's almost humbling to know that you can get it wrong. Because the way I've been going is I generally do not stick to one size with my trading. I don't stick to like one position either. Like I'm very busy trying to mimic what I'm seeing in the overall flow of the market. So like I'm not gonna like I'm just if I was gonna put on like $30 point trade, I might do like like 10 $3 entries
Yeah.
or like 6 5s,
Right.
or
So you'll scale it in and
I'm scaling most of the time
yeah.
because
Okay.
I'm not just trading on one time frame. Like I'm dynamically trading through the time frames because I'm trying to see price move from like tick plays to minute plays to 5 minute plays to 10 minute plays to the 2 hour plays. Like I'm trying to see them. I'm trying to identify when they handball it up to the next time frame,
Yeah.
because we're not, when we see like a 30-point move on the minutely, it's not really getting generated from the minutely. It's someone on the higher time frame
Correct. Absolutely it is.
moving it. Like, and it's still, it's a big move for the minutely, but you go to the 4 hour, and you're like, it's not
That's
that big.
normal. Yeah.
It's just a wiggle. And
Correct.
especially with DAX, like you never know what DAX is doing. DAX is a wild girl, but if you really look at the patterns it gives off, 30, 60, 90, 100 points almost consistently. Like
Correct.
if you watch those 30, 60-point swings, then you sort of reverse engineer and you say, well, I mean, every trade has 2 people per side, and then like if the market was just going to go up vertical forever, then it would do that. So we have to consider what both sides are doing all the time, regardless of what the price action looks like. So then if the charts are presenting like a seriously bullish picture, then we have to go and find like where the sellers are,
Yeah.
where they're eventually going to step in. And that's going to be from the buyers selling, or actually people
Well,
trying to
do you make a determination over whether the actual index itself is overvalued at any point in time? I mean, we've just come out of the DAX at, what was it, 48? Can you bring up a DAX chart for me?
Yeah. So DAX has been
Because I
wild.
mean, up here, we're up at that all-time peak in there. I mean,
Yeah.
it's never been up there. So of course it's overvalued.
But it was there not long ago, though. Like it wasn't that far above, but it was there. So we're trading
Yeah,
16,330 back in 21.
correct. But that's
So I
still
mean,
an all-time
we did
high.
get
So
there. What bothers me more is the way markets actually trade. Like, you know, I expect it to be like a nice curve. You sort of, you're reading the textbooks when you're learning science, like about sound waves and light waves, and it's just a continuously shaped.
yeah, it's a cycle.
Yeah, it's the same. Like, and you just don't get that from markets. But for instance, if you just put a circle, and now we're sort of getting off topic and more into my trading style, but even
That's all right. Let's just let this thing flow.
the thing that bothered me the most about trading and got me into the style I'm doing now is like, why doesn't the market just follow like an ellipse, right? So price is going up and then it's rounding off and it's going down. And
Yeah.
that seems totally natural to me.
Yeah, like a rounding top and rounding bottom.
Exactly. And like this could even be considered a triple top, or like, if so this freaking thing here, and I'm just gonna get a shape, whatever, just something different. What is this noise? All right. So who's responsible for that? What did that come off the back of? There was nothing fundamental to support that impulse push higher.
Yeah.
In my eyes. I was like, we could say, oh, we got down here and we supported there, but I mean, we've been selling off since like April.
Yeah. So
We've been wanting
this
to
is
go
a distribution zone.
Yeah.
Yeah.
So the thing that bothers me the most is like this little false break. So
Yeah.
at this point in time, all the sellers were right. Like once we got to the 21st of August, we can look back and say, well, you know what, these guys were right at the time. They took the risk, even though it was breaking out and looking like it was going north. They took the risk and sold, expecting it was going to come back to like the center of this ellipse, right? Because this is like largely where the distribution's occurring. And if we take a horizontal line, I'm just going to use a rectangle and just drop it in here. That's like the 50% of the ellipse. So
yeah,
sure, we came down, we tested the 50, and that's probably like the 618 actually.
Yeah.
I'm going to say like this up here is the 50.
Yeah, that's fair value there, I reckon.
And this is the 618. So my style doesn't revolve around trying to pick like the tops and bottoms. It's actually trying to find that middle ground where the 618 is and where the 50 is.
So
and
the
then
fair value zones, yeah.
yeah, and then building a Fibo like against that. So a lot of the time we all
There's
get
this
taught.
guy, there's a guy here that's written a book, okay, Bryce Gilmore, actually an Aussie guy, okay, this really old type of book on market geometry. This
Yeah.
is fantastic, this stuff,
See,
right?
I'll probably have to read it because I'm patterns all over. Like I'm,
Yeah, have a read of this one because you know, it's it's mind-blowing and it's really old too, right? Look how old it is. I mean, the guy's ancient, right? I don't know. This was probably one of the first books I ever bought, but this is, it's kind of getting into the territory of what you're talking about here. But anyway, keep going.
yeah, yeah. So I mean, I I think what's more important for me is to look at the price action like 100 different ways. So I don't think there's any wrong way to do it, but I think it's just trying to find like the maximum confluence. I know I'm getting a little bit off topic, but as I zoom out, you can see I've got like a channel base here as well. I'm going to delete this one. I'll touch on that in a sec.
Yeah, we'll go back to that in a second, right?
So let's just say if I was going to do a
So
vertical.
you're looking for where the middle ground is, the fair value. Sorry, let me just grab your mouse there. Just let go of your mouse.
Yeah, good. Yeah.
Yep. All right. So this will be your consideration fair value. That's exactly the same as mine because we've got, a lot of SR around in here. So
Yeah.
even for me, I'll be looking, whoops, sorry, let me just go back here. I'll be, looking at around even in around there. And then
Yeah.
we've been in that fair value zone and we've just been popping up and below. Buy at the bottom, sell at the top type of thing, right?
Yeah. So
Yeah.
then with that fair value, I mean, so my theory sort of relies on like price wanting to return to center constantly.
Yeah.
Um, like, we are sort of orbiting around the sun and the
Yep.
sun is the center. So
Yes.
imagine Earth is price, but we're never going to get to the center based on, astronomy and physics and everything. But I think there's a YouTube video which I'll post again in the Discord, and it's just some guy's random crackpot theory on how there's a possibility that energy transferring through like photons is linked to Fibonacci sequences. And I'm
Yes.
like, oh wow, you know what? If you can reconcile Fibonacci in the way energy moves through the universe, then I will absolutely use Fibos on my charts every day of the week because
Yeah,
there's nothing else you have to do really.
do you think Fibos, I mean, we can take Fibonacci, we all learned it in grade 9 math about, the golden rectangle and, how
Yeah, golden ratio
natural,
and yeah.
natural phenomena has that, Fibonacci sequence in it or some sort of ratio 1618.618.
Yeah.
How much of the Fibonacci retracement, all of these tools and things like that, is it really a natural phenomenon in the markets or is it a self-fulfilling prophecy?
Well, this is
Because
where
everybody else believes in it.
I know, and this is where I like this video because in his theory he reconciles that energy travels in Fibo waves, and therefore, if you think about it, all trading is digital.
Yeah.
Therefore, all the orders, everything that's getting passed through is Fibonacci waves, isn't it? So you kind of you can't just be like, oh,
We can't confirm nor deny, right?
Exactly. And I really love that. I love because that's what the markets are, isn't it? We're speculating. And we get that confirmation or denial on like a data release or an event or something. But in the meantime, we're just all speculating in between. So I think it's great because it's not specific. I hate working in specifics. I like nailing trades and getting like 100 points specifically, but I don't like working in specifics. Like there's been times where I will trade and I won't even look at the news. I've traded off a chart before for a whole week and didn't even look at the news. And that was just based on charts.
Well, in some respect, you can get away with that. You can.
Yeah, I mean, just to see that it could be done. But for instance, I wanted to reconcile all the different aspects of trading, all the different trading styles into like a more sort of intertwined strategy. So we talk about the fair value for this particular chart here. So we've got the fair value and then we've got the 618. So why not just build out the Fibo from that? Not from the swing low to swing high, because it kind of lines up, but it doesn't. what if I actually build it from like what I'm seeing in the middle? Because I want to base everything off the center, not the edges. Because the overthrow at the tops and bottoms, if we're doing false breaks and stop flushes and everything else, it's all really just we always when we're taking a trade, we want to wait for the price to come down and muck around and then start turning around and going the other way before we get in. We
Yeah.
want to sort of get in whilst it's ascending back again. We're not trying to get a buy-in down here. We're trying to get it like here.
Yeah.
So we want to really understand, the maximum amount it's going to go, but we can't. We can never know that because we just don't know how deep the stop waters are and the stop limits, or how
Yeah.
far
Well,
they're
where the tails are in the distribution.
Yeah, exactly. So I think it's better just to cut off the tops and bottoms in a way and then just focus on like when it returns past a level. So I want to now put this, and I just want to try and get it to line up with what we've done
Okay.
in the middle. So this is, I'm gonna choose the 50 as the most, this level here. So I'm going to pretend all these little itty bitties didn't get there, and then we get that major reaction on the 50.
Okay.
And then again, we've got through the 50 and then the major reaction. So all the little dibbles, there is buyers there and there's shorts closing there, but the real people who are waiting and turning it around, like they're sitting back, we can even go further. So all right, that's my 50 then, and then that's my 60 lining up. So then that's my Fibbo. So it's not here. It's actually like this one. There we go. So I'm going to take it there, and I'm going to pop that one there.
Okay. So just go back one question, just a question in here. Let go of your mouse there.
Yeah.
If you can. Yep. Just in here, what's the reason for centering it here or starting the fib level here?
So it didn't have to be there. I've just taken it left just to show that it will still interact with things on the left. But I'm really doing it based on like, you could even just say like there's the 618 touch.
Okay, so just on a common another SR level at this bottom in here, is that right?
Yeah. So I mean, we just wanted. I was just working with this ellipse, right? So on this 45-minute chart. If I was gonna do the whole thing from the top, I'm gonna go back to like a daily or a weekly. And I'll do it from here. So I'll delete all this. So here's really what we're looking at. So, I mean, this nasty, nasty Corona bang.
Yep, there's your Corona bang. Yep.
I'm going to ignore it. That's a horizontal, sorry. Just go here.
So for everybody watching, we're on a daily time frame.
Yeah, sorry for not telling you right. So I'm going to call this like a 50 or a 618 immediately.
Right.
I want to do trend. So because everything's fractal, the 50 can be the 0 or the 1 on a large time frame or a small time frame, etc. So it can be the 0 and it can be the 1. Right, so it's because it's fractal, right?
So what tool are we using here?
This is just the Fibos with trend lines. So in Trading View, we can just open up the Fibo, the Fibo menu, and just Fib channel.
Yep. Fib channel.
Fib channel, and then I probably want to. I'm just gonna do this. All right, let's go pre-Corona. So if I wanted to line up, I just want to try and get the. Let's go black so we can see it. And I'll just so ideally, I kind of want to focus on having overthrows of like the 618 and the 382 and trying to find the exact line, the SR line, which is the 50.
Yeah. Okay. So let me just point this out to people that are watching that are struggling at this point in time. Just hold your mouse back there, mate.
I'm just trying to get it before it drops. There you go.
Okay. All right. So we've got 0 point here. We've got the Fibo fan, is it?
Fib channel.
And we've taken a one fractal point and another significantly significant fractal point. This here is an anomaly, okay, because of COVID. Would you agree with me, Nick?
Absolutely, yeah,
Yeah.
yeah,
Okay. So therefore, we'll ignore that. Okay. So this here is the 50% level, which should be the center of the channel to the upside.
yeah.
Center of the channel, and you're looking for buys at the 382 and the 618.
I'm just looking for
Sells at
how,
the 618.
yeah, looking for how it interacts there. And I think
Watch
even,
how it interacts. Okay.
just to see it, and I'm going to pop this just a little bit lower, just to
Just
really,
so you're saying so it could, it's
I want to be
buy
really,
best fit.
I want to be really specific about it because I want the most amount of lines having the most amount of significant touches
Yeah.
to consider it being valid and alive. So
Yeah.
I've just squiggly moved it there. And what I've done is just lined it up to these bits here where like couldn't push through and we had wick and we had a back test wick.
Yep.
So dropped down, wick didn't go above, and then we came back up, got the close on that line there. And I'm just going to further. So it literally closed on the line. Yeah. And then, so couldn't close below, wicked on the line, and then we broke through and look, we're just
Okay. So it's
false
common
breaking back to center. So that's my whole channel thing.
Yep.
And then we fell through the center. We fell through the 382, or it'd be the 618 if we had drawn the fibbo the other way.
Well, this was
went back up to the 50. We couldn't sustain the 50. We couldn't sustain the middle of the channel, and so it just dumped.
Yeah. Well, WHO announced we're in pandemic right here.
Yeah. Yeah.
And that's why it just collapsed.
Yeah.
But ultimately, I mean, it was between here. So we're really looking at anything from here forward for trading opportunities. That's right.
And so let's pretend that this Fibbo structure still exists to this day.
Yep.
And every time we get a completion of price moving from like a 0 to a 1 or a 0 to a 1.61, this is the part I haven't quite figured out yet. Do we replicate the channel at the 1 mark or the 161 mark? This is the part where I haven't figured it out. So we've now broken through 1 over here, right? And we've turned that into an SR. And I can even get it on an angle, I think. Where are we? There we are. Yeah, there we go. So there's your SR on the Fibbo on an angle.
Right. So really, this is just an upper channel, isn't it?
It's just the top of the channel. So it's the same channel that was caused the Corona sell-off. So we're now back at the top of 1, and we've broken through it, and then we've back tested. And this is what I like to do.
Back test, okay, let me just let everybody know when Nick says back test, he means retest.
Yeah, exactly. I mean breakthrough, and then it's testing on the backside.
Yeah,
so
correct.
It's not the same as back testing a strategy.
Correct.
Now, another thing I like to do, and you've seen me do, is this is nice and clean, but in my reality, it doesn't work quite this way. In my reality, it works more like this. And we have to consider.
So what made you, what distance and why did you move that distance?
So that was basically pulling from the wick, end of the wick, to where the bodies are.
Okay, so when the closing,
right? And then I look and I see, it lines up pretty well here. And this is all just off what I'm seeing, like with my own eyes.
So you're looking for more of not just the end of the wick, but more where most of the volume. So if we take a volume, if we go over here, just like over your mouse there, we take a volume profile of, let's say, this area here, that there will be more really the lower end of the order block, wouldn't it?
Yeah, and it goes back to this guy's YouTube video where he's like, nature has like, it's not symmetrical, it's got like asymmetry. So I think it's great that we can just draw like one line on there, but I really like to work in like the band.
Yes.
Like a thicker band, just to.
Yeah, I agree with you because there's no such thing as specifics in trading. We've got to work within areas. Yeah?
Exactly, you've got to work within areas, and I'll mute this, and I'll just try and find. This is, again, I don't even know the maths behind this. You can watch this on mute, this video, and so much you see so much in this video that you see in the markets. It's just what drew it to me. Here we go. So this is probably my favorite part of the video. And it just basically discusses how there's imperfect symmetry. So everything will form by like a Fibonacci spiral, but there's a slight offset.
Okay.
So we kind of look at it like there's one of those spirals, but let's just pretend there's like a buyer spiral and a seller spiral. And so there has to be two spirals and they're not perfect. They have imperfect symmetry. So that's that little gap that I like to have. There's the
Right.
imperfect
So
symmetry.
I'll put a link to that YouTube in the bottom of in the comments below this YouTube
Yeah.
video. Okay, for everybody.
And again, I can't explain the video to you. I'm not
Yeah, well,
advanced
yeah, we're
mathematics.
not going to sit here and we'll spend hours doing it if we do
Yeah,
that.
yeah, exactly. I mean, I was just looking up Fibonacci stuff on YouTube,
Yeah.
and I just came across that, and it just reconciled so
Well,
many.
it's a very unique way that you're viewing the market with, viewing these as, Fibonacci spirals in channels. I mean, most people will be seeing the channel.
Yeah, yeah. But for me, it's a cylinder.
Right.
So
So it's actually a three-dimensional shape for you.
three-dimensional shape, because
Yep.
if you think about how time is calculated, it's via, and I've got it here. So the atomic clocks are mainly calculating the time by like, here's
It's a
like,
cesium atom.
yeah, here's a cesium atom. So
Right.
atoms that absorb this radiation make a quantum jump to a different energy state, the number of wave cycles per second, atoms jumping in different energy states. So I want to stick to that wave cycles theory and apply that
Okay.
into the markets, just because it keeps it simple, right?
Well, the thing is, I mean, I guess for you is that you've made an interpretation of the market in your way, which is, I mean, we could sit here and argue with each other that it is, is very close to another way of doing it. But, and this is what I encourage everybody to do, is to find their way of viewing it and having comfortable and being comfortable around it, and then
Yes.
trading it in your own way. Once you find that, then what happens is that you've got belief in what you're doing. So if and very similarly, if you're doing channels or you're doing SR, horizontal SR levels, you are trying to find those areas for resistance all the way along, sell at the highs, buy at the bottoms, and just go along with it. My style of trading, I've done the same thing. I found my way of doing it by finding, convergence of common areas of support resistance by looking at all these different things as well. So, congratulations on finding something that's working for you.
Appreciate it. And I think you're right. Like, you just have to find the strategy and style that most suits you, like that makes you the most comfortable. So I think I love channels because a lot of the time you can be like, well, if price is below this level, it wants to go lower. When price is above this level, it wants to go higher. And so it really just simplifies it for me. And I think even if we jump back to the chart here and we can say, all right, back on track. Let me know when you're, oh yeah, just edit it
Yeah,
out.
it's already going. So I just fixed up the crosshairs so everybody can see
A little bit
a
better.
little bit better. Okay.
So let's go on with just the same theory. So in my eyes, price was just, and now when we think about how price can move through a channel or a cylinder, think about how a comet or a meteor might like take routes around the Earth when it does a swing by. Like, it's not going and doing the same elliptical move every time.
Yeah,
It's reacting based on where it is and where it was and where the moon is and where the sun is and everything else.
yeah.
So it can
So
get
it's on a
confined
different
into a
orbit.
small orbit with high gravity, or it can take a larger orbit when there's lower gravity. And so when you think about it like that, I kind of think about it like price doing that, converging into the 50% center of the channel or the Fibo or the cylinder,
Yeah.
and wanting to stay there and move in a direction. So let's just go back and see what I'm trying to say on this chart. We've got the channel made of the Fibo 0 and 1, and I'm just going to put a channel on here as well. It's going to get a little bit messy, but that's fine. We'll still do a parallel channel. And we'll just take like this bit here. So between 2019 and 2021, price low was 10,320, and the high was 14.4. But the most of that time it's spent trying to hug the center of this channel.
Yes.
Ignoring this move and this move down here, which is, if I was to invert the Fibo channel, it's going to be like a 161 or a 261 down here.
Correct.
As well. That's what it'll be, without a doubt. But ignoring that, it just wants to hug the center of this channel, and this is quite a large channel. And so we got back down, we tested the base of this channel, we did the false break and return to center. That's what I love. Seeing a false break and return to center of a channel is like my bread and butter, because it's really like they've captured the momentum of it leaving. And now this looks like a V to us when we look at it in the chart. But what if you were to look at it where red bars are price coming towards you in 3D, and green bars are like price going away from you.
Right. So that's three-dimensional shape. Okay.
I know. So it's not a V, but
it's more coming toward and then away.
Yeah. And it's going to be like working around like this channel ellipse that you can see. And if I do it narrow enough, you can kind of see what I'm trying to talk about. Like, so it's going through like this.
Yes.
Yeah. Not like this. So
it's a screw, right?
Yeah, like a screw. So when you start looking at price like a screw, wanting to gravitate to like the center of any channel it can find, everything makes so much more sense, like to me at least. And it took me a while to figure out too. Like I was mucking around for like 7 months last year trying to like figure out what I was doing with all this. And it took me till October and a week of sleep deprivation and really like fry my brain with no sleep to like put it together actually. Like it was like a dream state. And it's funny because you read a lot of things and like, oh, I came to him in a dream, or I came to him in a...
Yeah, well, when you start putting yourself in like those type of hours, you do start dreaming about it.
Exactly.
Most guys that start getting into trading, and I remember doing that, you dream about, trades.
It's like the Matrix. The Matrix comes just all over your face. And and it was great. I loved it. And it was sort of, it got me thinking just more and more like, what if everything could just be Fibo? Like we love horizontal Fibos, and horizontal Fibos work so often as well, but the horizontal plane is only like a part of the cylinder movement. So if price was just on like a 2D plane, then the horizontal Fibos work perfectly. But for me, it's on a 3D plane. So we have to consider like trend line Fibos to help capture that. So even going forward, we can see how it's still respecting, like I chose it from here, I drew it back to here.
Yep.
And I'd still take trades off these lines. And you can see why. Look at that.
Yes. That's fantastic.
Like look at these.
Yeah.
There's a nice SR break and back test.
I mean, you could be buying all of this up in here. So
I'll let you grab the and you can be exactly right.
When this is going up, you could be, I mean, this might be early selling in there.
It is, yeah.
But you would see that that's starting to top this type of channel, but you'd be buying into here until it actually broke.
Until it broke, and
then you'd be selling it back into the middle.
Yeah. And the thing that bothered me the most about previously what I was doing was I didn't understand that. Like I didn't understand how price would move in these cylinders in waves. So I can almost reconcile like Elliott wave theory in this as well. But let me just show you what happens when you stack. I'll take these back to when it finally broke through that one. I can't remember how thick it was. That thick. No, it's over there. Turn this one back. I just want to make sure it's in the same place. There you go. So there's the back test on that one. you can just grab one of these, the same size, to keep it simple. Like why rearrange the measurements? Just copy it, and your 100 is now 1.
Yeah. Right.
There you go.
Yeah. Wow. That's amazing.
So now I'm looking at
There's your
every
new
time
50.
price interacts with one of those lines,
Excellent.
it's a potential trade.
Yeah. I bet you there's some minds being blown right now. That's fantastic.
And
So
then I can also say, well, there was my big 0 to 1 wave completion, and that finished in March 2021. And then we tried to enter into a new wave, and then what happened? We only got to the center of that wave. We only got as high as the center. So we got to the center, and it was a perfect center touch there. We sold off almost down to the bottom.
yeah.
So we know that's the center now. And then we know, like, well, the 618's up here, but fractally, if we want to get involved on a lower time frame, because this is all daily, right? So,
Yes.
we can take swing trades off this.
That was my next question is like,
How do you do
obviously
it, right?
this is a daily time frame, so it's quite wide.
Yeah.
And I always encourage everybody to go right out to the daily or even weekly to, find the very big areas of support and resistance because they're going to be very significant. But we're day traders. So what are we going to do?
So how do we turn them into fractals and lower time frames?
Yes.
Yeah. So I think it's more important to also remember, like, whenever there's a really big event, we sort of have to reset these, or at least the lower time frame ones. I mean, for me, we can hang out on the monthly, and I could just draw it on here and be like, all right, well, we're above the center, so it's going up, and we're below the center, it's going down. But I mean, I don't have decades to do my trading, so I need to be more active like everyone else. So I'll leave them on there. Now, I kind of would rearrange these ones now because it actually broke back through and touched the bottom of this channel down here, didn't it? So we're really more so trading back into this channel, and we've just had an overthrow. So now the consideration is to drop back into this center.
Yeah.
But stocks always go up though.
All stocks have an upward bias to them.
Exactly.
So if you take any stock market, so I'm not really seeing that this thing's, unless there's some sort of correction of some sort.
Well, this is where the important thing comes into it. So stocks always go up. Yes. So we have to deal with that. So buyers aren't our issue as traders, are they? It's bloody sellers. They're the ones who are getting in our way from sending
love affair with sellers. Right?
The bloody pesky sellers, mate. What are they doing? Well, let's drop it down. It's like an hourly. So
we're now down to daily or 1 hour?
We're down to an hourly, but I mean, I trade off a 10-minute and like a 10-second and a tick, but I think I'm going to go to a minutely just to show that the principles that I'm doing on the daily can be done on the minutely as well. And I was finding that they can be done literally at like the start of the session. So what time do we open? This one's
5 o'clock, 5 p.m. Aussie time.
Nah, like overnight. Oh yeah, because it's futures, right? So DAX futures are. I think there's more volume getting done in CFDs than futures for DAX.
Well, FDXM, which is a mini contract, is 4 p.m. open.
Yeah. So I can trade on my feed like almost all day. I think I've only like an hour or two where I can't trade. But if I was just going to really reduce the time frame, I'll be bringing it back down to, probably this week. So where's Monday? I'll just do a 5-minutely, and we'll take it from Monday. The great thing is you can like reset this every week, every day. It depends on your intensity of what you're doing. But for me, it's never the buyers that are the problem. It's the bloody shorts that are the problem. They're the ones that are going to get chewed up and spat out, like with these type of moves.
Yeah.
Or this type of move, or this type of move. Shorts are always getting slammed more than longs. So I want to know when shorts are feeling like they're vulnerable.
I think, there's always an upward bias to a market, but what I've always noticed is the sell-offs are always way faster than the accumulation.
Aren't they?
They are always.
always. And it's just funny
I
how
mean,
it works.
you go back here and just, I mean, just look at this alone. This one, sorry, just this one, just here, right?
Bang, yeah, yeah.
Bang, and then this is a bang, this is a bang, that's a bang. This if you take time over price, uh,
Yeah, it's
downwards is always more volatile.
exactly. And I think that's due to market makers hedging more than anything else. So
Yeah,
I'm always trying to figure out, you know, the institutions are trading against each other, but they got to trade against market maker when the other institutions aren't around. Like, so, CME has documents on market makers and the requirements of market makers to have, bids or offers on the book at all times to meet, market maker requirements, whether it's like 4 contracts or 10 contracts or something. Market maker has to sit there and offer price constantly.
yeah,
So then we're really trading against them
of course
more
we
than
are.
we're trading against other
Absolutely we are.
traders, but we're trading against the market maker. That's the invisible hand for me, and
Correct.
that's the guy that's moving price like this. So for this instance here, um, this is last Friday, I believe. We had a lot of buyers coming in here.
Yeah, because we were at a significant level down there
This
as
is a
well.
very, very big level, and like
If you take a horizontal SR level, it was the previous uh, 1 month low.
well, I mean, looking where we got to 15,500,
No,
and the
is this
highs were
5 minute?
the highs were 16,500. And we're down 15,500. So we've just done a 1,000-point run,
Yeah,
ignoring the trimmings on either side as like, price improvement on the 16.5 level or the 15.5 level.
yeah.
So let's imagine like,
You don't have any. You got
no, I don't have I've got the cheapo one. But let's just imagine that was it was a 1,000-point run. That's what they did. They double topped it at like 16.5.
Yeah,
And anything above 16.5 was price improved. So the trade is they're short 16.5. So do they make 100 points or 200 points or 500 points or 1,000 points? So immediately they've just smashed it down 700 points. So like, all right, they've got a bit of power behind them. So I'm not gonna aim for like a short down here. It's too far.
no way.
Just gone
Yeah, well,
700
it's
points.
too long in the tooth, and you're coming back
Exactly,
into that fair value zone. So never, and you've stated this before. Never buy in that
in the
that
hole. Yeah,
50% level. Don't buy, sell in. Wait for it to get to the outsides.
yeah, yeah.
Yeah,
So then to even get like that retrace to 618 retrace, we'd have to come like all the way back here, but we only got here. And
yeah.
like, is that
That's a
even a good level?
302.
302. Confluence with that bloody trend line, isn't it? See, this guy. So
Yeah.
support, and then
Yep.
that was a false break, and then they
Yep.
double tapped it on the underside
Yep.
just to make sure. Whoop, whoop, and then they dropped it.
Yep.
And then I'm like, all right, well, this line's in play, and I think that was something. But then even then, like I would go back and look at that and say, if they can't break it through this line and then come back and like test it, then it's no go. You can't use it as a buyer, and so I'm going to sell off it.
Well, I see it as if it's worked so hard to get down to this level, it's not going to go just turn around and go straight back up.
Well, yeah, exactly. They've done it. I mean, and you've seen me. I've been trying to short this thing from like all the way back here, like, and this thing bothered me because it was so unnatural. It occurred on the Friday night, and they ran it. Oh, this was the Wednesday, but it already died so far. But where's the Friday? Like started. Yeah, the Friday like started here.
Somewhere up there. Yeah.
It's disgusting. They ran it like 200 points on a Friday night.
Well, I think this was
we go down like that.
This was just that big fake out, right? So
yeah, and that was to capture
liquidity, capture liquidity. Yeah.
Yeah, and who knew how to do that though?
Well, certainly not the little guys.
Well, certainly not us. So I mean,
That's not really our problem, though, is it? We're here to trade what we see and just take what we can.
I know, but we have to consider like how angry were then all these sellers who are waiting for the move down. Like, even going back as far as like 16,000, how pissed off were they then when they just got run over? Like, all right, well, we're going to come out and we're going to step on it because you fucked us.
Yeah.
And that's why you get that. That's why you get that violence. And the longs were like, well, the guys that pushed it up from here, they knew this was a very short-term bump to capture this, to really put it on offside. So they were never sticking around. So that violence in the selling is because of the sells getting run over like we're getting on, and then these longs who were like,
Yeah.
a cheeky little move. Like Nvidia, what we sell off $30 last night, but we're up $30 the night before, a day before earnings. It's because no one wants to sell it hard before earnings so they can move it
Yeah.
$30 up, take
Yeah.
more profit for their longs and then let it roll over again. So I keep trying to consider what
They also want to buy into the earnings so that they can get the dividend.
well, does Nvidia have a dividend? I can't even
I don't
recall.
know.
I mean,
That's a question, but that's usually what happens.
yeah, well,
Everybody
exactly.
buys into an earnings report.
Yeah. So this big sell-off, I mean, if I went back to the other, I'm going to go to my dirty, messy one, I think, because so I don't trade off this chart, but it is a chart I have going around, and I have like 10 or 20 of these, and I try to reconcile the most important points of all the charts into like a singular chart.
Yeah.
And it usually just does come out neatly in the end. Like if I go in here, it's just going to end up coming out like this.
Yeah.
It'll end up being that clean. And I'll probably trade off something like that clean.
Yeah.
And I'll be trading off that, and that's a 4 hours, and this is a 10-minutely. So
when you are going down to like minute charts and making your decisions, you're still making the decisions based on the Fibonacci channels or the channels that you're drawing on the really wide time frames, or do you come down and you do the channels again on let's say the 15 or 5 minute chart?
I think we've seen instances where like if you get too busy on like the minutely, it just creates a bit of noise. That it does get a bit harder to understand really what you're trying to achieve with your charting. So I mean, it is getting to a point where now less is more. Like if I could just have one line, I'm like, I'm going to buy above this line and I'm going to sell below this line.
Yeah.
And that would be, if I had to draw it in, if you had a gun to my head, I'd like pop it in here and I'll just do that. I'll be like, all right, I'm going to buy it above that and I'm going to sell it below that.
Right.
That's it. It's just, and then that's how I'll create the channel. So I'm like, that's my 50. So then I'll put this down here and be like, oh, well, that's either a false break and return or that's it there.
Yeah.
But either way, that's going to be near my channel edge.
Yep.
And then, to have it, we're in IG now, so I'll rather go back to TradingView because they've got the channel that has the center in it. So I'll just back. Is this one? Oh, here's another one I've got two going too. So this is a really good theory one. So
let's stick to topic, right?
Yeah, it's the sixth topic. Moving the channel down into lower time frame. So I just wanted to find a chart that had a decent channel on there. So let's say, for instance, I'm working on this descending channel here, and this is largely what I've been working on this week.
Yes.
So we had somewhat of a head and shoulder onto that, didn't we? So like shoulder, head, shoulder. It's ugly. It's not perfect textbook, but it is, and it's shoulders against the trend line.
Well,
so,
what I'm impressed about is that the same levels, the above and below levels that you're actually seeing with your channels that you've been drawing is very similar to, the other areas of support and resistance, which is not this particular style, but, can be used by, somebody else. Like just, if we take this area just down in here, that is an SR level from back here. Okay. These two levels are pretty much exactly the same. So that was always going to be a buy for not just, somebody who's, looking in your style, but also in other styles as well. We're establishing, you're looking at this as your 50 level in here, but, if we go up here, we do a horizontal SR level, it's, kind of similar area,
absolutely.
right?
Yeah.
So
and I think that's where the cylinder comes into play. So I think, I could just trade horizontal Fibos and just leave it at that. But I think I was getting bored. I wanted more opportunities, and then I sort of came to the conclusion. I'm like, well, price either goes up or down. Like if it's going horizontal, there's a battle, but if you look close enough, it's still going up or down.
Yeah, correct.
Even in a horizontal.
I 100% agree with that.
So let's try and, I mean, if we'll try and dig down, I mean, I mean, if you condense it right, even like that, that looks like it's horizontal,
Yeah.
which is that box there. But then if you go in far enough, like it is not horizontal at all.
No.
Like it's going up and down. And then if you look really hard enough, it's descending
Yeah.
because they are making lower lows.
Yeah.
Like it's hidden though. It's so hidden.
Yeah.
And
Yeah.
it's the same at the top.
Well,
But
I
then,
agree with you. It can't never just, just be, oh, it's all about horizontal support resistance. That's all I'm going to think about. I don't need to think about anything else. That's kind of suicide to me.
yeah, but you
You know,
can't forget it though either because they're
you
such
can't,
big
you've got to
players. It's
think,
just so simple.
you've got to put yourself or your mind in the shoes of, you know, everybody else, the herd. You've got to
Yeah,
think, okay, Nick's using these Fibo channels. This somebody else might be using horizontal SR. Somebody else might be using just fib retracements. And if you can think on the larger scale of everybody else, then you won't be so rigid in your strategy. Oh, as soon as it touches X level, then I have to absolutely buy or sell it. But if you're thinking in a collective type of view, you can adjust slightly to find those common areas of support resistance to
yeah,
trade. Yeah.
agreed. And it's also, it sort of comes down to, um, like I'm still trading off price action more than anything else.
Yeah.
So like
Well, I think as
I'm
well,
still,
I think as well is that, and we touched on this before, in that less is more. When you become really good at what you're doing. I mean, these days I never use any oscillators. I mean, I've got it on the chart for, the new guys that I'm training so that they can see it and I can point it out. But you can see from a mile off that this here is divergence. There's
yeah,
divergence there on your RSI. You can see
yeah,
it from a mile off. You can see here that this here is a 50% pullback of that. You don't need to draw the Fibonacci retracement tool, right?
no,
You
exactly.
can see here that this pullback here is the 618 of that up leg there. It's not
Yeah,
hard to see it, right?
no, no.
So as you get better and better at these type of things, you really only just, you pull everything off your chart except for the candles and maybe
Exactly,
a couple of,
exactly. And it does get so much easier when you get to that stage as well. And then it becomes a situation of like where do you want to enter and how do you want to enter? So let's say we just had a look at trades. We wanted to get long around here. Um, where can we get long? So I mean, I could get long on the channel touch,
yep.
and then I could stay long and have my what I'll do a lot of the time as well is like I'll put a Fibo in between like the rail that I've got
Okay. Very good.
to see because I still think price can always still go down like because it's always in like a tram like I still think it can always go down and touch the lower but if I take this back
Yeah, well, it's over here. You've got this, there's nothing to say. Let go of your mouse there.
yeah
There's nothing to say that it can't come down to this level, this low in here, because there's a common low there, common low there. And in
precisely
between, it's nice, sits perfectly in between your tram tracks at the 50%. So there's
yeah
nothing to say that that can't come into there and have another go at it.
exactly so if I wanted to get in before then I have to have wide stops so I have
Yeah,
to
okay.
and if I wanted to get in like right on the top like you could this is a 1 minute chart so that might actually show up as like a double bottom on a 10 tick chart so I could do that and then I could run it really tight and just say I'm going to have the previous low and then go for you know probably up to the previous sell-off point. But
Yep.
more so, what I'm going to be doing is like loading in many of these and going, there's $3 a point.
Yep.
Here's like another $3 a point. Here's another $3 a point. And
Okay.
then, oh, well, here's the break of like the double bottom. I'm up at
Yep.
another $3 a point on here. And then like,
Yep.
here's the 50% retrace of that break. And
Right.
then it's conditioning myself to like not be afraid to add.
Well,
Because
that's one of the biggest keys. And, there's a lot of guys that will say this. I mean, we've got, Tom Hugard, I'm sure you read this.
yeah.
He adds to positions and I 100% agree with adding to positions when you've got it right, because usually you've got it right when you've got it right. So adding
Precisely.
is a great idea.
and like this one in particular, like you can see really like they've taken that as a double bottom, a fractal double bottom within the second trough of a larger double bottom. So, and again, everyone's looking for very clean. I am just so shocking at seeing patterns that don't exist to some people, but like they end up just being true in the end for me. So like this is a double bottom. This is like, it's ugly, but it's there.
Yeah,
That's
correct.
going to take,
Absolutely.
and then that's like the middle, and then the top's like, wherever it is up here somewhere. So there it is.
Yep.
And then the same thing, like this is a double bottom in here
Yep.
within the double bottom. So fractal patterns against a trend line or against a zone, very important. If this was occurring in the middle of nowhere, sure.
Yeah. Well, that's the
You
thing.
don't have to touch it, but like it's coming, for me, it was coming right at this point where it had recovered through the bottom already and then we'd broken up and would come back down. So really it was just back testing like this channel. Like we'd
What time
broken
was
back
that? It
the
was
channel.
about 4 o'clock in the morning too, wasn't it?
Yeah, Tuesday about 2 a.m. So it broke back in, and I think I took this trade here. So that I took the initial. So I sometimes get too aggressive. Professionally, what I want to be doing is like waiting with larger size for this
Yeah.
confirmation against the trend line. There's double bottom
That's the
confirmation.
thing, and I guess that's the struggle with a lot of traders. And this might
Yeah,
move us on to the next subject. Is that do you really wait for the perfect setup? Because
no, no.
sometimes you can be waiting for a very long time,
You can
right?
you can wait. You can
You
wait a
sit there
very
staring at the
very long
chart,
time.
and
Yeah,
it's frustrating, right?
and then it happens so quickly because the algo
Right.
spot
Correct.
missed
And
it.
if you're out walking the dog,
Yeah,
right, you've missed it, then you've got to wait for the next one. So,
you got to be
so what
fast.
do you? So, I mean, you did say that. If I'm doing larger size, waiting professionally, or doing this professionally, you'd be waiting for the perfect setup. But I don't think that's that possible.
Well, that I'd be waiting to shoot my clip. So I mean, this is 15,500, right? So I wasn't trading on Friday last week, but if I was, I would have gone. They've just moved to 1,000 points from 16.5, and it's now fucking the US Open, and they put it at the lows of the Euro session. There's no way that this thing isn't turning around after a 1,000 point week.
Yes,
And then you look at that price action, you're like, these fuckers are absorbing at 1,500. At
that's just a
15.
huge order block right there.
Huge, huge. Look at it. Look at it. And not only are they absorbing, they've wrecked these poor longs who got in a smidge early, and they really hurt them by doing that.
Yeah, well, you don't know how wide their stops are. This could be like some instos that have got their stops all the way down at 15.5 or
I know they can have like 50-point stops, 100-point stops. You just
yeah,
don't know.
correct.
So if we get a measure tool, there's a measure boy there. Let's just say they were trying to fill up at like, I don't know, what's that? 20 or something.
Yeah,
20 points.
yeah,
20 or 40-point stops or 30-point stops. I lost it. Let me go in that one. So yeah, they basically just like clicked those buyers,
yeah.
and then it didn't push any further. And then as soon as we had that let go, like you could take a long trade based on that even there. See, this is where I love the swing high and swing lows. So now I'm getting to the lower time frame. This is the 5 minute. So
Yeah.
I've now created my initial. There's my downtrend channel center, and there's my ascending channel center for
Yep.
my 5 minute chart. And now I can just go ahead and just like, no, I don't want a pressure channel. I want a normal channel. I'm going to be like, well, if that's the center, then this is the top somewhere. And I'm going to try and really do it based on like candle body closes and not wick closes. I want to see wicks above the top of the channel.
Yep.
Candles. So I'm not going to do this and say candle closes, especially down at the 5 minute. I just want to do like candles. And then I'll be like, all right, well, there's my 50. Okay, so it's going to be roughly in there. So we didn't quite get to the base. I'm going to just do it in the center of that one that I've got there. And this is all just very roughly doings. If I've got it right, I'm just going to extend this to the right just so. If I've got it right here, then it's going to respect the channel later.
Yes.
That's the importance of my theory.
I
like
guess
it has to keep respecting the channel.
correct.
So Is it really? I mean, nah,
Well, I
it
mean,
kind of is.
it is kind of coming up in, I'm still sitting in the center up there.
Yeah, so I haven't quite got the angle right. So for me, the angle has to be right. It's
Okay.
very specific. So a lot of the time, I'm going to
Well,
be
you'll redraw it until you get it right.
well. I want to be really considering like the price action. So
Yep.
now I'm going to redo it from this little drop here into this back test,
Yep.
and I'm going to grab it, and I'm just going to like rearrange it. And so the center is going to be back here on this one. So that's a bit better for me. I like that way better.
Right.
All right, let's go have a look through it now. Um, that was seemingly a pretty responsive move there. And there's selling against the center and then it breaks through. And then there's a lot of busyness around the center there too. So that SR there, I'm going to zoom in a little bit more. It's like it's really getting close to the correct angle. And then same thing, like candle close, just wick, and then candle close onto it and then comes off. And then, a little bit more here. And again, it comes down to that imperfect symmetry. It's not going to be perfect because it's all the channels are fractal and can keep going down in time frame. So there has to be a little bit of a little wiggle. So generally what I'm doing is my wiggle is the wick, or generally like the head and shoulder distance. So to keep it consistent most of the time, see down here, we've got, I mean, it's almost working here too, but this is an ugly head and shoulder, inverse head and shoulders. Ugly inverse head and shoulders.
I mean, but you could still interpret it as that.
Yeah, you can, but it's for
But
me
but
like
everybody knew that we're, after that 1,000 point move, we're right at the bottom. There's complete confusion around here, huge amounts of contract swapping. I'd love to see
I know it was Where is it? I'll
love
bring
to
it
see
up.
the volume on that.
It was big. Where's vol?
Yeah, I'll do another one.
Yeah, it's huge. Look at that.
Look at all this volume, because that's at the open of the US session, is it?
Yeah, and it's funny because on Thursday I'm like, you know what? They're going to fucking peg this thing all the way down the Euro session on Friday, and then they're going to rip it on the US session open, and then they're going to ram it high next week. And that's why you see my trades this week have just been like trying to capture those big thrust moves upwards, because I had a feeling every time they dump it into the lows on a Friday and the lows are at the US session open, very untrustworthy if there's no follow through. And there was no follow through in that US session open for 2 hours. They bloody held it there, and it didn't go any further down. I'm like, just the timing. Like, who has enough appetite to eat that weekend risk? Who took those longs down there? Almost outright.
Look at all the volume coming in through here.
Yeah.
There's your volume, all of that in there.
Oh, that's perfect. Yeah, exactly right. So, and I think this is futures volumes, isn't it? Like this would be pulling it from F DAX.
Don't know whether DAX D40. Are you on DAX 40? Are you?
Yeah, I'm on 40, but like
D30 is the futures contract, I think.
Yeah, I think because mine's I pull even with the 40, I pull out the volume from the futures as well.
Yeah.
So I'm still just watching the futures volume more so than anything else.
Then that's fine. Let's move on to something else, okay?
Yeah.
Let me ask you a question about, I mean, you did say that over here, just let go of your mouse there, on this double bottom over here. Well, this was 2 or 3 o'clock in the morning.
Yeah.
Are you still up then? Are you still, I mean, because we're on Australian Eastern Standard east side.
Yeah.
Are you still up and trading at that hour of the morning?
No, I didn't.
What's your time look like?
So for me, it's if the kids are asleep, then I can trade, or if they're not in my house, or sometimes even they are in the house, I can trade. Yeah. But I'll if I'm awake, I can trade. Basically, I don't have any set times. I know from next week, I'm going to be trying to stick to like joining you guys on the chat at 4:30 and probably going to like 10 p.m. Tuesday, Wednesday, Thursday. But you see me, like I'll be up at 5 a.m. and I'll be opening or closing trades on like the US close or the US open, and I'll be carrying something through from there to like lunchtime Asia session, or sometimes I just wake up and I'll check the chart. I'll be like, price is where it's meant to be. I'm going to take a trade.
Okay. All right.
And I'll look at the chart for 2 minutes and I'll be like, oh yeah, it's leaning against my trend line. I'll just take it. And I won't even look at it. Like for instance, like I could just naturally like I would short that. I would just
Yeah,
short that blip in there easily.
awesome.
Like I'd see that move and I'd be like, oh, they're just going to try and take him. And like, I'd even maybe short there.
Yeah,
And then I'll set my stops to like, where are we? If that was a 17 level, I'll just want to have it just enough outside. I think default DAX is like 20 point stops.
yeah,
So
yeah.
if you
10 to
if you
12. Well,
if your market
depends
had
on
a
whether you're
move,
scalping or not. I mean, if you're scalping,
yeah.
maybe a 10-point stop.
But I think the way I've broken it down is, yeah, it's a 10 point stop, but I want to look at it like if we're doing a 30 point move, 10 point stop, 3 to 1 R, or if we're looking for a 60 point move, 20 point stop, 3 to 1 RR, or if you get that 100, it's a 5 to 1 RR with 20 point stop. So I think 10 to 20 point stop, mainly, you don't want to be having like a 30 point stop with like a big order or a big position because you're starting to lose a bit of money that way. So they want to keep the stops tight. So I think 20 point stop. So I'm generally trying to buy into whenever I feel like they're running someone over. So if they're dancing around here at like 15,690, I'm going to be like 20 points. All right, have my stops above 15,710. So what they get to 15,710.
Yeah,
So I'm like, all right, I'll have my stops above that. I'll put them like 10 points above that.
yeah,
And
yeah.
then
So so you are aiming for around about 3 to 1 or 3 Rs,
at minimum, yeah,
minimum 3 R, and
trying to be,
up
yeah.
to what you reckon?
I think I got like 14 the other day.
14 Rs? Okay. All right. Because
That selling that 15, 16, 510 was pretty good. That was
yes.
270
So,
points.
but what you like on average, probably 4 or 5 Rs. Yeah.
Yeah, yeah.
Okay.
And it's doing that allows me to be aggressive and it allows me to be wrong and it allows me to be comfortable being wrong because I can be like, I've got like another 4 goes at this.
Yeah. Correct. Yeah.
Even trying to take the same trade. Like,
Well, I think if you've got the right SR levels, you know where the tops are with confidence, and you know that you're not trading in the middle of the fair value zone, then yeah, you're going to get those runners. You're going to get
yeah.
the ones that are going to pop for you. Yeah.
And I think,
Let me ask you a question about any like challenges and possible mental collapses that you might have had, because I mean trading's not easy for everybody. Have
yeah.
you tell me an example of maybe some challenging times that you might have had?
So I've got heaps even in the last 12 months. And I think you have to be honest and say, like, you can't escape life or the effect of life it's going to have when you're trading as well. And I thought I could do that. I honestly thought I could just turn you off, turn trading on, and then it wasn't affecting me. But looking back and looking on a few big days of losses, my mindset wasn't focused on my process of like charting and reading the news and everything else. It was so for me, whenever I was having a shit time outside of the markets, I would try and to come to the markets to make myself feel better because
Right.
it's my sanctuary zone. It's like my place of meditation. Like I feel very zen when I'm in front of the screens. I love it. I'm like a monk, all happy and just content. And so when things go wrong, I'll just try to escape there. But I wasn't exactly like thinking about trading. I was just putting trades on. So I think last year had a car crash with my kids in the car. Got T-boned to like 80k an hour. Everyone was fine. But that played on my mind for like 3 months and just I tried trading like literally the week it happened. I think I lost like $2,000. I had a car crash on like Wednesday. I'm like, oh, I'm just going to go trade. I'll be right on the Friday. And I think I was down like 2 or 3 grand.
Yeah, and that kind of compounds and makes it worse, doesn't it?
Yeah. In a couple of hours it was down. And then I think even on the Monday, I'm like, I was feeling pretty shit because not only did I have the car crash, had the shitty trading day as well. I'm like, so the next week, I think I started trying trading again. It was down Monday, Tuesday, Wednesday. I'm like, all right, well, you know what? Let's just stop trading until you process your emotional damage.
Yeah.
And you do that, like 4 or 5 times and you get down like 2 or 3 grand a day each time. And you're like, all right, well, this is clearly not working. Like as much as you want to be doing the thing that you're passionate about and the thing that you love, you just can't like sweep the rest of life under the rug and ignore it.
Yeah, that's interesting.
And so other days that I've had quite down days were my half brother was like had mental health issues last year. It was admitted to the Melbourne mental clinic and things, and so distracted by that and training poorly. He's just having a hard go of it and everything, and just
Well, I agree with that. I mean, if anybody's got, if you're a trader and you haven't got full attention on what you're doing and you're not in the mental space to be taking the trades, then just don't do it.
yeah, because you're going to get
That's what it
liquidated
is.
so hard. And because the thing, I think, I was speaking to my wife about this last night, and she senses how much happier I am. Like I was soullessly dead inside largely by the end of my time at the bank. So I've been banking for like cumulative 13 years on and off. And just sitting there on the desk, just doing mind-numbing like pen pushing work was horrible, and I just feel like I was just losing myself and losing my sanity and everything. So I quit that. I'm like, I'm gonna try the trading full time. Really focus on it. And I think the thing that drew me to the trading most was like, you can take the damage. It's risky. You can feel alive, and it's not just from winning. It's not just from having a great $5,000 trade or a 10 grand trade. You can feel alive from getting fucking chopped up as well.
Yeah.
And I think, and I can't speak for all the genders out there, but as a man, 10,000 years ago, we were running around hunting fucking mammoths and saber-toothed tigers and generally having a good time of it, taking a bit of risk here and there, getting rewarded for it. Nowadays, there's no adventure. There's nothing to explore. Like, we can't go to space. We can't go to the bottom of the ocean. Clearly too high risk and dangerous and expensive for all of us. Google Maps has got everything else covered. I mean, our new adventure playground is the internet, and that's kind of a bloody shit show at the moment, really. So trading, another thing that draws me to it is just the perception that it's kind of like a war zone. You're going out and hunting for your resources, and you can easily get decked. You can get knocked over. You can get taken out in a day, and so it replicates a bit more of like life outside of domesticated householders.
Yeah.
And I think looking at the markets in that manner really helps me, at least, because then I start looking at price action.
Yeah.
And I start looking at what's happened throughout the day, and I try to figure out who's in the trade at the moment, and then who's going to get hurt if price gets here, or
what strategies are in play at this point.
Yeah, because you want to be causing the damage. So say, for instance, like these longs, they got in here, and then the shorts, they might have taken this pop here, and then as soon as we push through the channel...
We took that last night. We took that shit.
Yeah, so I took that sell, but I took it all the way down here. I was very lazy with it. You got the sell up here, then you got
I did. Got it right up.
And that was so good too. It was such a good spot, just a little bit higher up, and you would have caught all that.
Yeah.
and it was just, and I think this is a 5-minute chart. I could, again, you're right in regarding to like charting, technical analysis on your own charts. Everyone has their own way of doing it. And I find it's very hard to like get 100% the same as someone else all the time.
Right, you can't.
So what I'm trying to do is, because again, this is a 3-minute chart. Like if I'm charting up a 3-minute chart and someone's doing a 5-minute chart, the bars are going to be slightly different. So they're going to be picking a slightly different swing level.
Yeah.
From their swing point. So I like to do a 10-minute, 30-minute, 2 hour. I think just to keep it clean. I can't even do 10 minutes on TradingView because I'm cheap and I haven't bought a subscription. But even going back to last night, like I think I bought this one on the break of the center, or the anticipated break of the center. I got in early again. I could have waited for this, but I think I got in like here. I was like, down here just to avoid. I just wanted to see if it would come back and just fill out this area a bit. It never did. And then I got out like on that. I literally got out when I saw that. I was out there. I got out. And they'd smashed it through, and I'm like, oh, I know this trade. I've taken this short a million times. And then it retraced back. I'm like, I'm going to short here.
Yeah.
And then I'm like, well, if I'm going to short here, I better get the fuck out of my long.
Yeah.
And I'm like, all right. Well, I've shorted there in my mind already. So I've closed my long and I've covered my long. And I've started shorting in my mind. I'm like, all right, so now where am I going to short? And I'm like, well, it's just going to go back to the center. So it doesn't matter. I now have to adjust my size and stop to make sure I'm getting a good return, but to not waste money as well. So I think I end up just taking the break of like this level here and then just keeping it tight, and then I think I got it all the way to
Well,
like,
you might, I mean, the VWAP came straight through here. Let go of your mouse. Yep.
yeah.
Oops. The VWAP came straight through there. So that was a retest of the VWAP. So
Yeah, yeah.
just in there. But anyway, yeah. All right.
And also, if I was to draw I think I had a Fibo level that was like really around there somewhere, and it was based on like that, I think. I think it was about that, yeah. And it was really based on like this. I'll try and actually replicate it how I had it. I've got a 382 on there too. Where are we? So I just tried to. I'm going to make it black just so we can see it. I tried to have the significance of like this touch point, and like this touch point as contained within like the 618 to 382 area, and it ended up being like really
A common
something like that.
Yeah.
So I ended up taking the break of the Fibo like for this trade. So it was, I don't know where I've got it somewhere. That's my problem. I've got like 20 different charts going, so I have to find the right one.
Yeah.
But again, it was just a break and return to center, and you see the same thing. Like, you know, this Fibo level, the trade's kind of the same. Like, it broke the center and it got to the top, and then it came back and it got back to the center. Really, like if I love trading view just to have a tool where I can just like grab this and then just grab the corner and just yank it up, and it just changes the angle to the channel.
Yeah.
But again, yeah, it's always just trying to find where that center is, whether it's the horizontal Fibo or the angle.
Well, I agree with you. You know, finding the center, don't trade in the center, trade on the extremities, or trade the breakout from the center. You know, that's pretty much the three kind of conditions that we've established here.
Yeah.
And that's the essence of supply and demand trading in the end, isn't it?
Yeah. And and I think there's some really good, if you were to apply like ascending and descending channels on like a 10-second chart from like the start of the session open throughout the whole session, and you could do it based on like the opening range balance, like the first 30 minutes or something. You could take trades based on trying to hit trend lines in the future. So my profit targets are actually based also on the trend line. So
of course,
it's kind of like I can take profit at 15,750 here,
and that would make
I hold it. I can do 15,800.
Yeah.
So I sometimes feel like the market makers are really familiar with how to like adjust that time to get a larger trade. For instance, like if we were just to try and like capture like this trade going down, even if it's just like those ones or something, like naturally, like, you know, we still got down here. We got all the way down here. So why did it come back up? Like, this is just violence. This is unnatural to me. When the remaining time, like, it's gone in that channel, it's respected it. So I'm like, there's
obviously a reason for it.
There's lies, there's bloody lies, and all these longs got wronged, but all these sellers were right in the end.
Yeah.
So
there's a precursor from this reversal in here.
Yeah, and I think
you can't see my just in here. Precursor to that. There's always, you know, some sort of volatility that
always, isn't there?
Then you'll get the final big push, and then it does its reversal.
And I feel like it's still just people being familiar with how like the structure works better than us, like at the minute level. Like there's players, there's insto players that just know like the gyrations of the market and when to apply pressure and when to pull back pressure. And I think they're really, really good at that. Like, I think they're so good at that. And I think if we were just to the move to the 161 or the 261, did they even do that? I got the 2 today. I took it to the 2. It's still so orderly and structured even within the chaos. So I'll interpret that as like a move to the Fibo 2, and then they're just parked it there and they're just hung it there.
Yeah.
So again, like horizontal fibos are still relevant and are still applied. And I
Yeah,
think,
well, I think everything's relevant. You just got to find your interpretation of it. But
yeah,
but
yeah,
if you've got the basics, the fundamental idea of there's always a center line and there's always an extremity either side on all time frames as you zoom down or as you expand out, then you're starting to get an idea of what's going on.
yeah, agreed. And I think it's for me. So I was trained a little bit by like a bonds market maker. He was at CBA for like 2 decades. And it was the same, it was a similar sort of thing. Like he would just hang in the Bollinger Band.
Yes.
If there was a sharp movement, he would just come in with some supply or some offer,
Yep.
try to get some neat fills. If you got run over, he'd spread it off against bank bills or something and try and rescue it that way.
Yep.
But a lot of the time, like he would take an outright directional with a big parcel of bonds and just hope for the best because it's so familiar with what he was doing, and it was like it ended up just being very similar to like just trying to capture the upper and lower bands of the price movement, like
Right.
the extremes, and you're returning it to the center as well. I suppose, like you're right. In the end, we just have to try and know who's got the edge, who's winning. So it's price has to be ascending or descending
Overall. Yes.
overall. And I think Germany, the DAX, my favorite. I actually had this set up before we started, and I had it like Control Z and Control Y to cut and paste the. I'm just going to clear everything off this one. That's fine. Here we go. The most favorite aspect of like keeping it simple is like if you can just have one angle in which to base all your activity off. Like what is the angle of the market? And for me, it was like, what is the angle one? Sorry, it's in here somewhere. Turn the angle, there we go. It was about 11%, I think, the DAX. So I was just grabbing like swing levels from here to here. Where's 11? I had a draw before, so I'm going to use 11 again. Yeah, so it's probably those two. So typically, I'll have to zoom it out. There we go. Typically, like the way everyone's naturally doing trend lines is like from the tips, isn't it?
Yeah.
Like you'll grab this, and that's your trend line. But then you can do that 100 times though, like, and it's just going to be different like every time. So if you just stick to one angle, you can rule everything with like one angle. So let's just say 11. Where are we? 11% would be like 169. And then just put it where it touches it the most.
Yeah.
And the same thing with like 11, and like I'm going to drag this back here. And I want to see like false breaks through the line and come back.
So will we be getting into like some GAN theories when we're starting to do things like this? So
it is a bit though,
square of 9, that type of thing.
It's still Fibo bloody trend channels via a 3D structure. Like, and it all comes back to Fibos, Elliott. I can reconcile Elliott wave. I can reconcile like Wyckoff distribution. I can reconcile all these things back into like Fibo trend channels. And even we're on now the hourly, right? Let's just say this was our Fibo 0 base, but on an angle, and then obviously like up here's around 100. So let's just grab that. Here we are. There we go. About there, right? Yeah. So now we have, well, it's respecting the 161.
Yep.
So it's bounced off and also the 261.
Yeah, 261. Yeah.
So we're doing super busy hard work down on the minutely.
Yep.
Whereas the instos are sitting up at the hour.
All sitting up on the big time frames.
Yeah. Like, all right, we've got to push it. All right, here's the 0. We've got to push it to the 50 first. Once we get the 50, we've got to get the 100. Once we get the 100, we've got to get the 161. Once we get that, we've got to get like the middle and then the top. And then, because it's, again, like fractal. I'm leaning so hard into the fractal nature of the Fibbo. So you can just do like, and I've just done a channel now, but you can do these Fibbo trend channels within the Fibbo levels. So what I've just done, I can do it between the 1,618 and the 2,618, but I'll just do like one. So even just doing like a parallel channel between the two Fibbo levels, you can make trades based on the center zone. Like, all right, I'm going to go long here. Fuck, these guys went long here. Look at that. They really did a breakout along that setup.
Yeah.
And then, well, I mean, they really
and they struggled to push it through. Yeah.
Yeah, and I think they might have even taken that to the 3. Yeah. So,
and I was just about to say 3 on that.
Yeah, exactly right. So now I'm like, fuck, I've wasted a lot of time doing a lot of business down in the lower time frames, but really like it's these large time frame participants that are in control, and they're the ones that are moving price around, and like they're the ones that can spend 30 points at a level turning it around. Like we don't have the liquidity, like the lower time frame people don't have that liquidity. It's the higher time frame people that are doing it. So daily or 2 hours at the min. So now if we change that back to a daily, we spent 4 days trying to get below that level. We didn't. We had a false break and we just immediately ran. So I won't draw the Fibbo on that one there. I'll do it where the structure actually was. Yeah. And then once we clear all those buyers, even these very reluctant buyers who don't want to sell, they're coughing up down here in the end. They're like, fuck, all right, we're well past, previous resistance. Yeah. We don't want to play. And they're coughing up into the worst price. They're getting chopped up, aren't they? Because look where we go.
I'm sure there's a lot of newbie traders and even experienced traders that think that, it's broken and it's just really just a flush and they just get absolutely nailed on it.
And it's so dangerous because like there's so many times like we've been trading and like we do that big sell-off and then it's down to lows. I'm like, oh, we really expect this thing to go lower, and then it fucking doesn't. It always just turns around. Yeah. And that violence in the turnaround is what I'm trying to capture, because that's
if we take this, from somebody else's perspective, where are we? These are all fibs. Where's our retracement? Is that retracement?
Yeah.
And we just have a look at that. That's the 618 pretty much on the dot.
I know. Yeah.
So
exactly right.
I mean, I went long on that one. That was during that Silicon Valley Bank crisis there. So I took that long.
Yeah, it was too. And you nailed that short too.
I nailed the long. That's for sure.
Was it the long or the short that you were ranking?
I took I think I took the short into the 618 and then I went long. I reversed it around.
Yeah. And so that's the 618 of that one, which is perfect. And I think we had that charted up, didn't we? Like even on the day, if we look back at the Discord, I think it was in there. Yeah. And it was a perfect touch. But we still had all this structure first. So then that 618, that's where I really love that channel, the descending channel break into the 618 and then the bounce back, because not only are we capturing the descending channel, so we want to try and get it to the center, we've got the 618 buyers, which is the most efficient level to buy from in the whole market, as per like Fibbo theory.
Yep.
Yeah. If you go back to the largest time frames, the weekly or the dailies, and we go to like in a crisis, they never get it past the 618 retrace. They never do. Yep. It's always
618 is the best place. You take Carolyn Baroda and she'll sing 618. All day.
And so I've gotten to the same thing. I'm like that 618 retrace is just the absolute bee's knees to be doing business, and it's even better when they
that's 618 right there.
That's 618 right there, and it's so much better when because I find the channel players are definitely the biggest players along with the Fibbo players, and so a lot of times when we get like a violent move near the end and a reversal, it's just one of the parties getting run over by the others. Right. So either the 618 are getting run over by the trend liners, or the trend liners are getting run over by the 618s.
Yeah.
Something.
So then in the end, then it's you can play either game, but in the end it ends up being the risk to reward that's going to save you.
Exactly right. Exactly. So it just comes back down to you just have to have your stops out of their battle zone.
Out of the zone. And hold on to your winners as much as you can.
Yeah. And so I think the hard part is really, and like we've discussed it in the channel before, like sometimes you take a trade and then you get stopped out and then it turns around on your stop. And so then you get told, oh, just start taking trades where you put your stops and see if that works.
Yeah.
And then that sometimes works, but then like the market evolves and then you get run over again because the way they generate liquidity is they'll set up the structure and then like they almost never let it go past without running it over. Like, and it's,
Yeah. Well, I usually call that the last hurrah. It's a liquidity pop. of some sort.
yeah, I don't see it that way. I just see it as like fucking tricky brokers being best fill, wanting to get the best fill. So
Well, it depends. I mean, if you're a
like,
CFD
this was
broker,
a big short base here, right? Wasn't it? Look at them. Look how
yeah, I
much
mean,
short
that's
energy's
that's
in
a
there.
it's a distribution zone.
I know, like from Feb to March. So we've got the short options, short futures, short CFDs, short shares, everything. So massively accruing shorts. And then we do end up down like 14,400 from 15,600. So we end up 1,200 points lower.
Yeah. And
Why?
that was only helped from that fundamental news that was coming out. All
But
this,
all
yeah.
these sellers knew about the fucking banking crisis already though, because look at them,
Yeah.
they're carving it up. That's big bear claw energy right there.
Yeah.
How did they still pop it?
Well, that's not our problem, mate.
That is our problem though,
We're
because
not in that inner circle. But why are you making it into your problem if you're never going to know, you're never going to find out. Why don't we just deal with
okay,
what
so
we've
this
got?
this is an edge to my strategy, right?
Okay.
So if you can identify when the largest time frame parties are getting run over by market maker,
Yep.
then they're going to commit the most violence, returning themselves back to like homeostasis. All these shorts got pissed off by this, real pissed off. And so as soon as they saw that double top, they fucking committed the violence. And look in here, like this absolute dropping in here, like look at this. Like just, what was that? That was 14.4 to like 14.9, 500 in couple of 30-minute bars. It's it does go back to that, a natural curve. Like if we can identify when they're doing this, then we can get on this really aggressive move because we know what's behind it.
Well,
So
on a fundamental level, you would have been knowing because this was the start of all of that Silicon Valley stuff, right?
okay, but it goes back to COVID, right? We knew about COVID in Jan, but the lows weren't till March. But it kept on ascending from like Jan to
Yeah,
Feb.
because the WHO didn't declare it a pandemic until that very day. when it
I know,
started
but we
dropping.
still ended up lower. So
Yeah.
but my biggest issue is why does the market continually trade in a direction when we have overwhelming fundamental data to indicate that it should not be doing that?
Yeah.
So who is able to actually get it to do that?
Yeah. Well, if you, well, I read it somewhere that 80% of the top what 100 companies in the US is owned by 3 fund managers.
Yeah, yeah,
So they've got more power than anybody else.
exactly.
So
So
if they want to dump it, off it goes. Right?
exactly, and their intentions are
And
they want to
they'll
dump it.
do it on the dark web too. Oh, sorry, not
Yeah,
dark
yeah.
web, dark pools.
They want to get best price though,
And
don't they?
nobody will know about it until the next day.
And they want to get best price too.
Yeah,
So
correct.
this, for instance, like this is now Feb, and then the Silicon Valley Bank stuff was March, right? So 4 weeks, really, not even.
Yeah.
2nd of Feb to
Don't you think that?
six,
Don't you
six
think
weeks
it?
of heavy selling because every exec knew
Yeah,
that
because
the bank was
everybody's
trouble.
hang on, everybody's back here. This is an accumulation. This is moving to the upside.
I
Okay,
think that's
and it
post,
takes
post.
some time to wind out of the positions. Like that's just based on the Wyckoff theory, right?
Yeah,
They can't just dump all their positions at once because they won't get best price for it. So
no.
every time it comes up to the price, they'll start dumping it again, but slowly let it release it all so that they can keep getting good price. Because if they go and dump it all straight away, it'll end up coming straight back. Yeah.
Yeah, precisely. And so how do you elicit a market environment where you want to generate the impression of strength while you're unloading into them? So like this particular area here,
Yeah.
this is ugly. This is ugly. They are like unloading. Look at that. This big unloading into there. I'm like, that buyer got wrecked. Look at that
Yeah.
buyer.
Yeah. Well, I don't
Somewhat.
know. To me, that
Like that's a big buy though,
anybody
right?
to
That's
buy,
15,000 contracts, I think. Or is it? Uh, no, it's just against the price. That was the highest contract print today.
yeah.
So we have to be careful because there is an
Well,
entity
but
out
anybody to
there.
buy, just let go of your mouth. Anybody to
Yeah,
buy up here, right? After we've even made all of this resistance level in here, they're looking. Anybody that's looking for breakout on that, right,
yeah,
is pretty much
dead in the water.
suicidal, I think.
Yeah,
Right? Because they're looking for this continuation, but you turn into this block in here.
yeah.
But unless you get something more convincing, that it's buying up here is, I
It's,
think it's for the newbies.
well, I mean, yeah, exactly, right. And then they were still able to push it all the way
Yeah,
up
they
and
pushed it from
to
down
clear the
here.
existing highs though. And it's and we look at the volume profile and there's just no volume there. So I think Tom Hoogard's right where you can find price will get pushed to an area to create the most damage to the other side, right? So
Yeah,
let's say you were right in the sense that we've got this ginormous long position that's been accrued and they have to unload it at the price they want up there.
yeah.
Look how far we're going to go up a time frame. So it comes down to how do you unload these positions into the market without spooking them and without
Yeah, well,
getting
it's a slow release, and that's the whole point of Wyckoff theory, is that they release it slowly. I mean, look,
yeah
it's happened. It happens all the time. Let go of your mouse there for a
yeah
minute. Right?
exactly right. And
There, it's happened there. It's happened there.
yeah
Go back to anywhere along the chart. Look, there's an accumulation phase. There's a
yeah
small accumulation phase in there. There's an accumulation in there. There's a small distribution in there. When you get the move into it will always round its way out. Okay.
I know.
Creating an ending diagonal, or if not, that's a really beautiful
That's a
head and
beautiful head and
shoulders,
shoulders.
right?
Yeah.
So, if everybody has the understanding that, and this will happen until the day we all die. Let me just try and find the right tool for this, because I want to describe it properly. No, where am I? Here we go, somewhere here. You went pathway, so you already had it. If we're moving to the upside, okay, these things, if you think that's a sell zone, it's not going to come straight back here unless every fund manager on the planet just goes and unloads all of their stock all at the same time. It's going to go through some sort of rounding phase, right? And
Yeah.
then start to break, right? And this, where we want to come in, and we've got to understand that if to buy up here for thinking that it's going to start continue, sometimes it will when you've got a big trend, but a lot of times it won't. Okay, is that we've got to come in at the place where we start to see the break of the lows, and it's had that time to round over, to make that elliptical shape that you were talking about at the start
Yeah.
of this video, right?
And so I 100%, and that's the way we should be doing it. And so
Yeah.
sometimes
Yep.
this is where I will get aggressive and get in before the breakdown because I sometimes sense price action is done in a particular way to generate liquidity, right? And this is a really good example here. Like this double bottom here, like everyone saw that. You can tell just
Yep.
from that, right? Look at that.
Yep.
But I mean, the channel was much more respected post breakthrough. I'm going to just get that channel back. So I'm going to pull it from the bottom, and I'll literally just do it on this swing loader right next to it here, like right there. I'll just drag it out so it lines up. There we go, out there, right? So, and then I'm going to take it and I'm going to nail it back to this one here.
Yep.
Line up there. All right, there you go. So you can even see how the breakdown of this channel caused the selling into the second trough. Right? And then that was obviously like a Fibbo 50 retrace there, or a 618 retrace for this one, and then it took off. You can still find that they're going to get really aggressive buying like here. Like I'll even buy this before we even get to like price. Because to me, they've done a bit of a dodgy and they've pushed it through the bottom of the channel, but we have already created enough price action.
Who says the channel is the be all and end all though?
That's what my strategy requires, because once
But it's not
You-
the, it might not be the same as 60% of other traders won't be looking at that.
I know, exactly right. But
But they're
that's
looking
where the
for a
strategy comes
retest.
in, and
They're
it
looking for a
diverges from general trading strategy in the sense that I'm still trying to figure out how the market makers are absorbing trader activity without getting offside themselves, right? So if we're going to have a bazillion traders hit this double bottom, how does a market maker handle that? If they know, like fucking market makers know that trades will hit the 618 or the 50 or the double bottom or the double top. They're fully aware. Like every broker probably has all of their traders' data analytics, and it's probably all fed into some big system that can identify these things.
Well, I think you're speculating a lot there.
I am, but that's what we are. We're speculators,
I
right?
think, we've got to be careful about creating market makers into this conspiracy theory that they're there just to fucking just ramrod everybody, right?
No, not all the time. Not all the time. A lot of the time, they'll actually, in my opinion, create price action which can be supportive and giving the impression that it's going to go higher, right? So, say for instance, we're selling down here, and this is looking pretty steepy sells, isn't it? And
Yeah.
then this gets stopped on like 12.6.
Yeah, well, that's
Comes back
almost
up.
back at this SR level back here.
Who's the people that are buying here?
I'd,
know
I'd, I'd be buying
they,
there
they
too.
know they know that if they put the brakes on here, they're going to cause shorts to cover.
Right.
So
Let me
I'm looking at trades where it's like, at what point is the other side going to be unwilling to hold their positions any longer and either cover, or what side are they going to want to press? So it's going to be coming down to like how weak are the hands, right? How really weak are the hands? And it's going to be a lot of the time it's like the break of the trend line or the Fibbo level, but it still has to go back to like, man, have you seen like the top of book liquidity for futures lately? It's fucking atrocious. Like there used to be so much liquidity on the bid and offer on futures, and now it's
Well, that's it. Well, because we've come out of COVID. I mean, if we
exactly. So how do they still generate that liquidity levels required with the thinner tape?
Well, if it's futures, it's on an exchange. There's no market maker involved at all.
Oh, there's still
There's only market makers involved when you're running a CFD, a book of some sort. You're not getting market makers on futures. That's
so
actually real price.
how are they like, so if buyers wanted liquidity at 12.5,
yep,
and they saw this happening,
yep.
who's then going to give them liquidity below 12.5? Sellers don't want to be short in the hold down here.
Yeah. Okay. I guess it's the same as what's happened over here. I mean,
but like sellers don't want to be short. So how do you get sellers down there?
Because somebody thinks it's going to go lower.
You force the buyers to cover.
Yeah, potentially, yes.
And you scare them out with like a trend line break. And then it fucking turns around and zips up so much further than it had gone.
Yeah.
And so
perhaps there's just enough. There's not much liquidity in there, and that's why it just drops into that price.
Yeah, exactly right. But it's.
I mean, it did drop into.
It's not chaos. It's not random. It's not random.
It did drop. It dropped into it quite quickly. So the lack of liquidity pushed it into this price, and then it turned over.
I know, and that was all of the long buyers coughing up. Yeah,
potentially.
And so all those long buyers just coughed up into like, what's the distance there? 12.660.
Well, it may be a lot of people some buyers just didn't think that it will come back into this zone.
Yeah, exactly. They didn't think it was gonna get back into the channel. But look at that. So then going back, look at that channel recapture. And it's almost like bar on the line, and then as soon as it spent 4 bars there, fucking straight back to center.
Yeah.
Immediately. And look where it stopped.
So good, isn't it? Beautiful.
And so this is my bread and butter. This is how I get my probabilities up. I'm trying to find where they've done the dirty to be able to get the momentum against like the prevailing trend. So it's got to be like, we are so in short here. We were short from like 14.7 down to 12.4. That's a big short base, isn't it? So how do you scare like those shorts out, well, you obviously do this. That's got them out. But I mean,
Absolutely, dude.
if shorts were just, if they wanted that nice simple channel, I'm gonna draw it from like the first shoulder. I always draw my channels from the first shoulder, and then I'm like, you see this gap in the price action here.
Yep.
It's just, yeah. So it's going to be like in there, really. And then I can either draw this and I can take it back to like here, previous swing, or like here, or I can even do it here. It depends how thick you want your channel to be. I
And then
really
you
like doing it.
find best fit going
Yeah,
forward.
I like doing find best fit. So it's probably going to be like, I'm going to do it to here. I like that.
Yeah. Okay.
So we've now got the starting of a descending channel, but it's really small and it's not really helping us figure out what's going on there. I mean, they pushed it to the bottom of that channel there, but that's not what we're looking for. Let's go back a little bit further. Like that one up there. And I'm just gonna like really just try and get it matching most of what I'm seeing. Resistance. This is one escape, and then this is like what? 1, 2, 3, 4, 5, 6, 7. There's fucking 20 touches there.
Yeah,
so I'm like, well, I'm going to lean into that. I'm absolutely leaning into that. All right. So here we go.
That's a beautiful, beautiful trend line. I mean,
look
at it. Look at it.
We can say it broke back
get it any
there.
better.
And like if the shorts are like, we've got to get it back under. We've got to get back under. If we can't get it back under, and if it gets back to the center of this ascending, we're fucked.
Yep.
And so look at that. They're having the battle. They get, a little bit. They get a little bit. I don't think they got enough. I think they got given enough rope to think they were going to get there. But then, this one really important coming back. Now I can say, well, you're still in play and you're a center now, aren't you? So then why don't you be the top? And why don't you be the base?
Yep.
There we go. And so then it just comes down to like being able to just see it sort of break through and come back, and like when it just magically lines up every time, like to a tick or to a point or to 2 points or whatever, I'm like, oh yeah, well, you're respecting it now, so I'm gonna play with you. Like, so that's a really nice one. So we had a nice double bottom and then 50 to 618 retrace, and then burst through that ongoing that wasn't even there back then. It was the top of that channel, but that top of that channel didn't exist.
Yep.
It was like the 161 or the 2 of this channel. This was the channel that we were focused on.
Yep.
We had this move out. But So then once it finally generated like enough price action where it considered it to be the center, then we can like, all right, well, that's the top now. So then that's the full range. And then it's now a descending channel where price is no longer getting into the lower bound. So in a descending channel, we want to see like full coverage of the face. This type of move, yeah?
Yep.
This type of move. So if it's not getting below the 50% center, it's going up.
Yeah, that's turning over.
And it's very difficult to like sometimes see it. Like I will take this buy based on this. I'll be like, oh, fucking hit that. Just seeing that, I'm like, all right, we'll come back to the center of the descending and we're way further lower than the previous lows, but we haven't had like a reversal structure to say that we're going lower. So I'll buy that, right? And then we come back and we dilly-dally, but I'm already sitting here saying, well, my stops are below here or below the 618.
Yeah.
Because generally if there's a bottoming pattern and then there's an impulse move and a retrace, it usually doesn't go below the 50 or the 618, especially after like a fractal double bottom, and there's like double bottoms within double bottoms. So then it becomes just going, oh, all right, well, you're no longer being able to maintain center of descending, which you had since January 22.
I mean, it's all very interesting, mate. It's I'm sure everybody's going to be able to play with all of these ideas and give it all a go and see what they can get out of it, because SR channels, all those sorts of things are going to always help you. We're 2 hours and 10 minutes into this, so I
just saw that. Even my mouse is flashing low battery. We've been going on for a while, so we can get back on focus if you want, or we can. No,
I think we're gonna probably wrap it up pretty soon here. Let me just ask you one final question, or a couple of final questions here. If somebody's new into this game and if they're probably really already just you know, the mind's been blown already by what you've already shown. But how do you really, give some advice around, the length of time it's going to take you to trade or learn how to do this, and, some pointers around what they should do to, improve their trading or get onto the right track of becoming a good trader, because, we know it takes a long time to do this.
Absolutely. It's probably important. I spend so much time drawing lines on charts. I'm a technical analysis type of guy. So I put a lot of time into doing that and refining that. But it is the biggest challenge is like battling yourself, isn't it? It does
Big mental game, right?
big mental, like, and you can create big mental damage to yourself by making the wrong moves, and you can constantly chop yourself up regretting something that you didn't take or you did take, or questioning whether you've read the situation correctly. I found that I was having a lot of that when I wasn't trading a lot. So you've probably seen in Discord, I make lots of smaller value trades a lot of the time. Sometimes I make bigger value trades, but I found, for my preference at least, to get over the fact that I had a lot of fear in taking trades, was to just take trades, just to force myself to take trades. So
yeah,
I went to a smaller time frame. I went to like a 3-tick chart, and I just applied all the principles that I was doing on like a minute chart and a 5-minute chart onto the tick chart. And I went and I reduced my size down to like the smallest the broker would give me, and I just
you start
constantly
on really small and then
entered in positions. Like it was about it was more like conditioning myself and my muscle memory to click the button more than reading what the trades were, or the risk reward, or whether I was reading the chart correctly. Because the risk was so low, it was like 20 or 30 bucks if you're wrong. So you can do like 10 of them in a week and lose your beer money for the weekend and still come out on average. You're not losing too much. You can say you're investing time into learning your skill set, but a lot of people.
Well, I think that's the biggest hurdle that most people will do, is that they'll stare at a chart for, a year, 2 years, and they'll never get to that. They'll never get to step over that hurdle to get into real money and actually making it work for you.
Yeah.
Because
And
there's so much fear that goes on.
I think you have to just lose money. Like I have lost tens of thousands of dollars between like 2012 and 2020. Like I started getting profitable near the end of that decade and then took a break, and now I've come back to it a bit. But I mean, I was losing so much money. I mean, the worst week I had was Volkswagen, right? The Volkswagen scandal, the diesel scandal. So this was 2015, and I had accepted a retrenchment package out of ANZ. I got like 40 grand off them or something. And I'm like, I'm going to dump 30 grand in a trading account, and I'm going to just be a trader.
Yeah.
See how it goes.
Yeah.
And it went really well for like the first 2 months, and I made like 10 or 15 grand. And then I ran myself over, as you usually do. It wasn't the market that ran itself over. It was just me being a fucking idiot. So I loaded up big on a Friday night. I'd made already like 1,500 bucks during like the Asian session. And I'm like, I'm just going to just size up and just fucking have a good go at this. I'm the master, I'm the god. And I think by the close of Saturday, I was down like 2 grand.
Yeah.
And I'm like, whatever. I'm just going to hold it through the weekend. I don't care. This was back before risk management wasn't a thing for me. I was gambling, I reckon.
Yeah.
And I'm like, you know what? I'm down 500 bucks. I'll wear that, whatever. And then I woke up, it was like 2 or 3% down on Monday because the whispers of Volkswagen news had come out.
Yeah.
I'm like, all right, well, I'm just going to hold. It'll be fine.
Yeah. You're in denial at this point.
In denial. I'm like, it'll retrace to the 50 or the 618 before it sells off. And then like the scandal like blew up on the Monday or the Tuesday. And I'm like, you know what? Volkswagen shares from like 150 to 120. I'm going to go buy some of them too. So not only did I not close all my index jobs, I had Nikkei, I had ASX, I had DAX on. spread across the fucking board. I started buying Volkswagen as well. I'm like, you know what, they'll come up again. And then the next day it was like confirmed. And then they said, oh, we're going to take billions of dollars in payments and charges. And I think the shares dropped from like 124 to 90, the Volkswagen shares. Obviously didn't sell them at 124. I let them go at 90.
Yeah.
And all the index trades I'd been averaging in as well.
Yeah.
So I had unwound like 2 months worth of work, 15 grand. And by Wednesday, I was down 24 grand. So 3 days.
I'm sure all of us have had, and I've had, when I started, I was, 30K, dusted that. Everybody's dusted money, I guess. And that kind of gives you the understanding to do it properly.
Yeah, and that's the point I'm getting.
Learn how to do it.
You've got to lose money. You've got to lose
money so you become humble.
You got to lose like a fucking limb's worth of money. Like you got, it's like you amputated your arm or your leg.
Chopped your finger off.
Yeah. It can't just be like a finger. It's got to be something
serious.
Yeah. So I think copping that 24K in the 2 days, that was the point in which I'm like, well, you know what? This is not quite the same as gambling on the horses or the football or whatever. There's some serious participants playing at the moment. And I took a break. That was, when was that, like August or September? And then I took a break. I ended up joining the bond prop firm in like February the next year. Because I said to myself, you know what, maybe I should go and like see what the professionals are doing, get an understanding of how they're doing it before I go waste the next 25 grand. So then I ended up being at the prop firm for a while, and that's when it came. It was so important to worry about the risk management then, because they're like,
correct,
you can trade bonds and we're going to give you 1 basis point. Stop.
Yeah.
That's what you get.
Yeah.
I'm like, fucking how am I meant to do this?
Yeah.
And it was pretty shit, to be honest. I ended up leaving there after 9 months because the bond volatility had collapsed by then, and I was trading Aussie 3-year bonds and bank bills, and I think that it was like moving like 3 basis points a day. I'm like, I'm not here to try and capture 1 basis point out of 3 basis points.
Yeah.
And they were all set in their ways trading bonds and had their strategies. So I'm like, I'm out of here. I'm going to go back home and see the life and go trade Forex and indexes and things that actually move.
Yeah.
Because I think
it's pretty hard to trade things that don't move.
Very hard to trade things that don't move, and then I think it's very hard.
That's why I really don't really get involved with anything in Australia, because it's just such a small market. You've got to be in the big markets for the volatility to make it worth doing it.
That's true. And then I think you're right. And that's also where the ASX works really well on like technical analysis, because there's just not enough big participants to push it down.
And there's not enough participants to actually warrant technical analysis working.
Well, it does. It really does. Like if you just look at ASX and you just try to hunt like 30, 60, 90 point swings, same as the DAX, like it's very ordered and very structured. And I think like even when we see like the turning point, and it's a bit ugly like this, right? Like it's just ugly. But then just pick 30 clean points between or 30 or 60 or whatever it is. I'll try and find a lower time frame one just to give you an example. Like say for instance, we've done now, this is, the low was 676 and the highs were like 760. So let's just say, well, it's a bit hard. Let's just take like a clean block of either 30, 60 or 90. So they've got 80 fills, barely, so they've probably got 90. So let's just say they're long 90 at the moment, and this is their fills. So here's the 90 SR. So this is the long base. This is where they're long. This is all price improved, and this is their actual level. So if they're long 90, they want to take it to 120, 150, 180, or 15,790. So we're now like, if this is 90 and this is 120. So look, there's 30 points, and look at that. Look at the clean move.
Yeah.
That transition.
Well, that's the thing. I think that's like the frequency of the DAX anyway, 30, 60, 90 points.
Yeah, exactly. And then if you get into the frequency with your market, then it becomes so much easier, because you can say, oh, look, even this one, I only got to the 50% of this expected move, and then they've sold it down. So then we can say, well, it didn't quite make it. Now let's see if these guys can get 30 points.
Yeah.
Because the minimum expectation. If your side is going to make any headroom, then you got to look at like what the effort is. I think in the ES it's like 5 points or 10 points, right? But for DAX it's like 30 because it's like 3 or 4 times the size. So I'm thinking, all right, well, if these shorts, if they can't even push 30, what are they doing? Like, what are they doing? I suspect this will get to 30.
Yeah, well, we're in Asian session at the moment, so nothing's going to happen until the open of the market.
Nah, and because it's so quiet, they'll probably
I completely ignore Asian session.
Yeah, I still watch it too. I think it's
Well, I don't want to be staring at charts, 24 hours a day. It'll just
oh, you're so right.
do
You're
your
right.
head in. So, I go from 4 o'clock until, 10 o'clock at night, and then that's it. Then I forget about it. Because if, after, I guess for me, after 20 years of doing it, it just does your head in. You want to do something else.
You're right. You're right. And I think for the people who are transitioning from beginning trading to getting to a more experienced level, you got to put those hours in. You got to watch.
Yeah, at the start, you definitely got to put the hours in.
Yeah, I was telling a couple of guys, I'm like, you can get that experience watching the minute charts and the 10-tick charts because it's, all the patterns are fractal. It's generating the same patterns.
Correct.
And you get to see more often. You get to see them more often happening and completing, and you can like get that belief that it actually does go from here to here if this is the case and things like that.
The good thing as well is even doing this replay on TradingView. I don't mind that.
I got to start doing that. I was like holding it. I was holding it with the mouse click and just dragging it across, doing it.
Yeah, well, the replay.
Exactly right.
I like it, dude.
Everyone should be doing the replay.
What you can do is you can just go back, pick a random date, but just close your eyes, scroll backwards so you can't see anything, and then replay it, so that you are not biased with hindsight bias.
And just trade it as well. And I think once you've got enough experience, you can transition to like any market, and you can clear everything off your chart and just trade the candles, because it all ends up being pretty similar. But I think the most difficult part is transitioning to larger size, and then knowing what time frame to deploy.
Scaling up, I guess, is you've got to set yourself hurdles. If you get your account to, let's say you start with a 10K account, you go up to 15K, then you can increase your size slightly. But if you come in too big too quickly, then you're mentally not prepared for it.
Absolutely. I think even so with that DAX short that I had near the tops, I think I'll go back to that one because it's such a good. I think I got like it was like 16,510 and it was like 270 points. So that was. I only took it like down to here.
Yeah.
I left all that on the table, and I was hunting that thing so long.
Yeah.
And you know what? If I had like a fucking $10 lot on, I probably would have held it.
Yeah, maybe.
But I didn't. I had a much bigger size on, and I was just not comfortable.
Well, for this type of collapse and that type of run, it doesn't happen that often. So
no, and
I don't blame you for not thinking that it was going to go, because it's already moved. It's frequency, right? So
my issue was I was expecting it lower. I was expecting it.
You were short the whole way, weren't you?
Yeah. So I've been short this thing all the way down. I've only just started buying now.
That's it. All right, mate. Let's wrap this up, okay? Because we've been going for 2 hours 20. Okay.
Yeah. I'll have to get some edits in there.
Okay. What I want to do is I want to thank you for participating in this. I'm sure everybody's got a lot of information out of it. If you do want to get a hold of Nick, you can join our Discord server. The Discord server invite will be in the comments below, and you can talk to him if you wish. And you can, I suggest if you are watching this and you're into trading, to come in on board with our Discord so you can see us trade live and, see what we're doing all the time, and potentially come and get some training from us. And we'll teach you all of these aspects. So any final words there, Nick?
Um,
Just briefly.
it's not for the faint-hearted, is it? Trading,
No,
like it's
certainly not.
you gotta want it. You really gotta want it,
Correct. You
and
do.
you gotta be passionate about it. Like I can be a bit batty about my passion about it. I've kept up multiple people into the middle of the night talking my head off, and I think it is. You really got to treat yourself. You know, you got to treat yourself kindly because
Well, I think that's why we've got that community in the Discord, is that so that you're just not alone. It can be a lonely sport if you're trying to do it on your own. And I tried to do it on my own when I started, and it was the most depressing thing that I've ever come across. Right?
yeah, well, I mean that's why I found you because
Yep.
at that point last year, I'm like, none of these fucking people at the bank are wanting to be involved in my trading discussions, and no one was listening to me. I'm like, I better go find a trading group
Yeah,
to.
well, that's it. That's what this group's all about, is just trying to support each other and make sure that you're not alone and that we've all got your back, right?
Exactly. It's good
Um,
to have a pod that you can bounce ideas off and
correct.
have interaction with and
Yep.
to see if everyone's got the same mindset or if we've got different thought processes. It helps reconcile, things that might be wrong or might be right. It's good. It's just good to have somewhere where you can go and chat
All
about
right.
your
Cool.
passion. Because if you don't have that, it's a very bad place to be. So
Correct.
100% agree.
That's it. All right, mate. So let's leave it there. And I thank you very much for coming along and sharing your ideas and what you do. And it's very interesting. And I guess we'll chat later.
Yeah, absolutely. My pleasure. It was good
All
chatting
right.
to you.
Okay, cool. All right. Thanks, Nick. We'll see you later.
Yeah, take care.
All right. Bye.